ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Live from Washington, here's the price action for you. Going into the midterms here in America, going into the opening bow 3 hours away. Equities up by 0.2% on the S&P. A lift again on the NASDAQ. 2-day winning streak on the S&P Friday into Monday. Can we continue the rally going into the midterms? In the bond market, we shape up as follows. 2s, 10s, and 30s. Your 2-year holding on to 470. Your 10-year just south of 420. Your dollar over the last few days has been a whole lot weaker. Tom, here's the stat you wanted. Euro dollar over the last 3 days, positive 2.6%.
A big move.
That's the biggest 3-day pop. Biggest move over the last 3 days since March 2020. Euro dollar right now just in and around parity.
Thank you for confirming that. That's great. Can I ask a question?
You can ask any question you like. Are we having a stock
market lift getting in front of the inflation report on Thursday, or is it about the election today?
One, I don't know, but two, if you want to break it down just briefly, consensus view is that we get divided government, and that's what this market wants to see.
And
this
no
market
tax
believes
increases
that
is
is
what
good.
This is really about.
I would go one step further than that. No fresh unfunded spending, which would complicate the effort of the Federal Reserve. The difficulty I have with the consensus view around divided government being overwhelmingly positive, I understand that might be in the near term. I think Lisa and I have both been talking about this over the last couple of days. I wonder if that holds true in about 6 to 9 months' time from now, when we have an economic downturn and there is no buffer coming from anywhere, from monetary policy, Lisa, or from fiscal policy for that matter as well.
I would agree with that. And to put a narrative to the recent price action, I would just say this is a range-bound market with a complete lack of conviction. To give any narrative to it at all is ridiculous, simply because, and I will say this, that you're seeing earnings come in weaker than expected. You're seeing downward revisions. You're having a hawkish Fed, and okay, you might get gridlock, but this has all been known for a long time. So what exactly has changed to create this rally? Maybe technical.
I'm absolutely convinced that that's how Lisa wakes up in the morning. Bramo just sort of sits up, looks forward, and those words come out.
Yeah, it is. That's
Sees
true.
a chart of the S&P, it's up or something, and it's just like this this monologue. And everyone's waking up in Casa Bramo. It's just like,
just my kids
Lisa's
complain
up.
to you?
Lisa's up.
That's basically
In Washington for 2 days, let me cut this off and get to our good guest here. In Washington for 2 days here for the elections today, and of course we'll be with you tomorrow morning with some interesting results to say the least. And part of that, as I was learning at the Willard Hotel, the Round Robin Bar last night, is it's about oil country. Oil country is Oklahoma and Texas. For Stephen Shork, president of the Short Group, it's not about Texas, it's not about Oklahoma, it's about heating oil in New York Harbor. We're going to go narrow here, Stephen, because it matters to so many of global Wall Street. Would you explain the why? Why is everybody talking about heating oil in New York and the Northeast?
Yeah, absolutely. First and foremost, Tom, in the Northeast, it's because 70% of the heating oil market homes are located in the Northeast, so a significant amount of homes are going into winter, and we simply don't have any supply. Why is New York Harbor important? Well, this is because where you make and take delivery on the NYMEX diesel contract, the heating oil contract, and right now we're looking at inventories that are well below normal. In fact, The Pennsylvania Turnpike, Tom, yesterday up in Allentown had a post that their fueling station on the Turnpike was closed because Allentown was out of diesel fuel. We're out of diesel fuel, and we haven't even come close to the start of the heating season right now.
If that is the case, can we say it's not in my backyard a distillate refinery matter, or is it because the oil went to Ukraine?
No, absolutely. It's the NIMBY crowd. We have not built a refinery in the United States since the 1970s. Here in Philly, we had a refinery, Tom, that refined 330,000 barrels of crude oil a day. That was operating just 3 years ago. That is no longer there. So we've cut our refinery capacity here on the East Coast by more than half. That oil has to come from somewhere. Now it comes from Houston. It comes up through the pipelines, or it comes up through very expensive barges. So we simply don't have.
Steve, it comes up from Houston because they won the World Series. Continue.
Yeah. All right, fair enough. But you know what, Tom? Every time a Philadelphia baseball club, I just read this, I think it was in USA Today the other day, every time a Philly club, either the A's or the Phillies, won the series, the United States went into recession. So maybe the Phils did us a favor here, and we're not going to go into recession. But with distillate, diesel fuel, the problem here is we don't have the refineries because of the NIMBY crowd. Gasoline is your biggest margin. So what other refineries we do have existing are maximizing their gasoline output at the expense of diesel fuel. So now we're going into winter. We don't have the diesel fuel. Normally, Tom, where we'd make up that difference is barging it over, tanking it over from Antwerp, from the refinery epicenter there in Northern Europe. But of course, that's not happening because of Ukraine. So now we're in a situation where we simply don't have enough refineries and we don't have enough diesel fuel.
But Stephen, a lot of people are saying this is partly because of the political backdrop, because people are not investing and there isn't a consistent policy on rewarding fossil fuel companies for investing in refineries. Other people, like Regina Mayer of KPMG, saying it's because of Wall Street. Wall Street doesn't want to see these investments. They are not rewarding companies for building new refineries, and that's going to keep prices higher for longer. What's your view?
Well, I'm partly in agreement with that, Lisa. And again, we haven't built a refinery in the 1970s, so I'm not going to go down that road saying, oh, we're not building refineries today because of the Wall Street crowd. That's just a fact of where the market's been for my entire life here. But with regard to your other point, it's well taken. Absolutely. My smaller producer clients, their bankers are telling them, go find financing. You know, we'll stick by you now, but in 5 years, we're only going to stick with the big guys. So this is a very fragmented market right now, and the haves and the have-nots are going to separate over the next 5 years. And you are correct. That is the signal being sent from Wall Street, from the banks, to the producers. And it's a very scary situation here because we're simply not investing in the infrastructure that we need to. Fossil fuel demand is not going away, people. So we're not investing in our ability to sate this demand. As we could legislate as much as we want, the demand's not going away and the CapEx isn't there. And therefore we are in a long-term bull market when it comes to fossil fuels.
Stephen, just quickly, is the biggest refiner in America still owned by Aramco? Is it still Motiva?
Yes, it was a joint venture between Motiva and or Saudi Aramco and Shell when they built it a number of years ago. Saudi has a full ownership of it, and that is the largest and the most probably productive refinery that the United States has right now.
You know where I'm going with this. There's a reason I asked that. What do you make of this relationship breakdown between this government, this White House, and Riyadh over the last few months?
You mean this government and that pariah state over in Riyadh? I think the White House has tipped its hand well on the campaign trail that they were going to cast Saudi Arabia to the side. And now I don't know if we saw that Twitter quote the other day. I haven't had any new drilling in my administration, and yet we're going to a pariah oil producer to ask them to increase production. Has he stepped foot, President Biden, in the state of Texas to appeal to those producers? I don't think so.
Right. Steve, not in my backyard. Is it a political issue, or is it like China where Republicans, Democrats, independents, they all believe in not in my backyard? So it's really divorced from the election? Which is it?
Oh, it's absolutely divorced from the election. This is not a Democratic only NIMBY crowd. Plenty of NIMBYs. I mean, on the Republican side, this is a human nature. This is a greed. This is, I don't want it in my backyard. I want to preserve my investment, my home, my community, my neighborhood, so forth. So no, this is not a Democratic rant or anything. No, this is just a typical look. I love the fact. I used to love the fact I'm here in Delaware County in Philadelphia. That refinery was on the southern part of the county. I live in the northern part of the county, not in my backyard. So we have to be honest with ourselves. But at the same time, that refinery had been there for 100 years. We sure wish we had it now, just a couple of years later.
Stephen, on the election day in America, we are looking at the likelihood that Republicans will possibly increase the ability for the U.S. to export natural gas to Europe. How much is that on your radar? And the whole NIMBY idea being, we want this in our backyard. We don't care what happens in that backyard.
It's a great question, and I'll answer it this way, Lisa. Now, I think in Western Pennsylvania, the epicenter of the steel industry implosion in the country in the 1970s and the 80s, Shell built an ethylene cracker in Menneson, just north of Philly, where the J&L steel mill employed decades and decades of steel workers. That area, Menneson, Aliquippa, and so forth, is a skeleton of itself. Shell built this ethylene cracker, and it's now bringing life back to that area. It's keeping its young people. It's bringing in engineers. It's bringing in employment. So this is a source of economic growth, and that source of economic growth goes from Pennsylvania, the natural gas epicenter of North America, all the way down to the petrochemical epicenter down in Houston. So yes, that is clearly on our radar. And in fact, 5 years ago, when natural gas couldn't break above $20 equivalent barrel oil, the industry thought, we were building too many LNG export facilities. Now, with natural gas in Europe trading almost $600 barrel oil equivalent, we're saying, oh my goodness, we haven't built enough. So yes, absolutely. We're investing in this, and this is something this is the maturation of the natural gas market. It used to be, a market that I produced it in this area, I put it on a pipeline, and I consumed it at the end of that pipeline. That's no longer the market. I'm going to produce it, put it on a number of pipelines. Maybe it'll go to that consumption area. Maybe it'll go to the export market. And that is what's attracting the real investment in this industry. And that is the future of the energy market for the next 2-3 generations.
Stephen Shork of the Shork Group. Stephen, thank you, as always.
Thank you.
So many Western governments are guilty of what Stephen's talking about. I can look to the UK and across Europe where there is a reluctance to embrace fracking, but they want to embrace the energy that comes from fracking abroad.
Yeah.
If you go back 12 months,
I've observed that, yeah.
The example in the United States, do you remember COP in Glasgow? Comparing COP in Glasgow to, was it the G20 in Rome? Where at the G20, they were calling for OPEC to pump more, and COP, they were talking about ending fossil fuels.
It's a very
try and square that circle.
It's a difficult policy to get, especially if you don't have a clear message on how much fossil fuels are needed in the short term.
Julie Norman's going to join us shortly, the co-director of the UCL Center on U.S. Politics from Washington, D.C. on Election Day with futures up a third of 1%. This is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Lisa Mateo. The U.S. votes today in elections that will decide which party controls Congress. Millions cast their ballots in advance. Republicans feel good about their chances to capture both chambers. President Biden admits it will be tougher for Democrats to retain the House than the Senate. Close races mean it could be days before the final result is determined. Donald Trump says he wants nothing to distract from the importance of today's midterm elections, so he's holding off until next week before making what he calls a very big announcement. The former president is expected to declare he'll make a third bid for the White House. In China, hopes are fading that authorities will lift a lockdown of the area surrounding the world's largest iPhone factory. COVID cases have more than doubled in the city of Zhengzhou. A 7-day lockdown of the area that houses Apple global iPhone production base expires on Wednesday. The local government may extend the curbs. And Japan is reportedly delaying plans to revise how it taxes carbon. That's according to the Nikkei newspaper. The move potentially slows efforts to wean Japan off fossil fuels, and it comes as world leaders gather in Egypt for the UN's annual climate change summit. Shares of Lyft are falling in pre-market after the company reported weaker than expected ridership growth in the third quarter, suggesting it's losing ground to Uber. The news comes after Lyft said it would cut 13% of its workforce, nearly 700 people, in its second round of layoffs this year. Last week, Uber said its ride-hailing customers had rebounded to pre-pandemic levels. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Inflation should come down, but don't expect its drop to be immediate or predictable. We've been through multiple shocks, as I discussed, and significant shocks simply take time to dampen.
That was Tom Barker, the Richmond Fed president, live from Washington, D.C. Another leg higher in this equity market on the S&P 500, up by, let's call it 1/3 of 1% now, TK. Two-day winning streak Friday, Monday, this Tuesday morning, pushing higher once again. Yields lower by a basis point or two, 419.70. Euro dollar, look at that, TK, just for you. Euro dollar, negative 0.2, 10000.
There it is,
Like
to
that?
4 digits. That's the way we do it on Bloomberg Surveillance. Somebody asked about that. Sometimes with currencies like yen, you go to 2 digits, and the convention is often to go to 4 digits as well. We do that for global.
Of course
Wall
we
Street.
do.
We do that. There's no question about that.
For you and for Wall Street and for everyone
Did
else.
anyone actually ask you that?
Yeah, we were talking about
Oh, yeah, it's
earlier
just
this
serious
morning.
stuff.
Carry on.
We just
Okay,
like-
sorry.
No idea. And
all
the
right,
way you
I don't
quote it,
wanna-
we don't need to go into it right now, but the way you quote foreign exchange is a huge deal. In
He
the
was having
Bloomberg
that
world.
out-of-body moment about the midterms.
Yeah.
Remember he was talking about it?
Yeah, exactly.
Yeah,
Let's
he was on a
have it.
trip about decimal points and stuff.
Yeah.
Yeah. It's a long night.
Carry on,
Continue.
Tom.
The way Julie Norman
Please.
looks at currency is, sterling down at 114 is not where it was at 130. She joins us now from UCL, University College of London Center on U.S. Politics. Of course, expert in this world of terrorism, but also a student of the American moment. Professor Norman, thank you so much for joining us. And you are focused in on the shifting democracy of America. I'm going to use Arizona on the border with Mexico is the test tube of all this right now. How important is what we learn today and tomorrow morning to the democratic process of the first Tuesday of November in 2 years?
Yeah, Tom, I do think it is going to be crucial for this election cycle to go somewhat smoothly for Americans to just have trust in the system again, and that's on both the right and the left. Obviously coming out of 2020, but going into 2024 as well. We know that there's over 300 election deniers on the ballot today in both state and federal offices. We know that many will probably be in office as of tomorrow. There might be some challenges, and I think many of us are just watching that closely. Obviously, Biden and the Democrats have been really trying to hammer this home. I'm not sure that messaging has stuck, and obviously other issues are a bit more at the forefront for many voters, like inflation and the economy. But I think both things can be true, that inflation is driving the votes, but we still have these broader concerns about what this means for the system and if we can restore that faith in these institutions again.
Witnessed selective court cases, including one, I believe, in Arizona, literally in the last 48 hours. Do you suggest judiciary to the rescue as we move out 2 years?
Well, I think we saw it in 2020 that the judiciary was really one of the main guardrails and bulwarks against some of these attempts to exploit the system. So I do think we can see that again. Again, everyone has the right to challenge results, but if there's no evidence there, that's where the courts come in and push back on those allegations. I think also I and others are hoping that the reforms for the Electoral Count Act go through Congress. There has been bipartisan support for this in the Senate. I think it'll be important to get that over the line before January, because that will also close some of the loopholes, mainly at the federal level, but some at the state level too. And I think that with anything else will be a strong outcome from a lot we've heard this year about January 6th and all the aftermath of 2020.
Maria Tadeo pointed me to an article this morning that I thought was really salient, Julie, about how European nations are kind of sleepwalking to the midterm elections in the U.S. So they're not really fully comprehending what could be potentially the withdrawal of some Ukraine aid if Republicans do get the majority in the House and the Senate, and some potential fissures on certain trade policies. What's your perspective over from Europe's vantage point of how important this election is?
Yeah, well, Lisa, it's interesting you asked that, because here I do feel people are asking that a lot. What is this going to mean for U.S. foreign policy? What is it going to mean for Ukraine in particular? You know, we've heard a lot from some on the right and some parts of the Republican Party about not wanting to have this blank check for Ukraine, trying to have some limits to that. In reality, I think that's still a smaller part of the Republican Party. We still have key leaders like Mitch McConnell very much on board with Ukraine aid. You know, 70% of the U.S. population very much on board with that. So I don't see it shifting dramatically in the short term. With that said, I do think there will probably be some increased pressures for accountability on that aid. Republican attempts to tie that to some of their other priorities to get it past Biden and get some of their agenda items through as well. And quite honestly, I expect that probably not only in the U.S., but across Europe as well, there will start being these domestic pressures to try and figure out what's the best way to manage this aid going forward. And I also think,
Julie, you mentioned Mitch McConnell. I also, we're watching for Donald Trump's potential announcement next week on Tuesday when he has a big announcement that we expect to be launching his 2024 campaign. Why are we looking at President Biden and former President Trump as the potential frontrunners for 2024? All of these people who have been in politics for a long time, even as the rest of the world has moved on, and the leader of these parties is less clear now than it was 2 years ago.
Yeah, it's so true, Lisa. And I think both parties, some are at least hankering for a bit of a shift in the generational leadership right now. Biden, you know, I think he has to at least right now project that he is going to run for re-election, whether he actually does that or not. And I think after today, he'll have a bit better sense, and Democrats will have a bit better sense of how much they're going to lean into that, or maybe start pressuring him otherwise. Trump, you know, just still has this grip over the party, still just polls so strongly that he just cannot be ignored. And I think that his momentum and energy will push him forward as well. But we are seeing even his lead chip away a bit. DeSantis and others, you know, are making a stronger case and a stronger run than we would have seen 6 or 12 months ago. So we are still 12 months out, or 24 months out from 2024, so I think a lot can change then. But right now, our focus still is on these two individuals, and I think we can see today as a bit of a referendum on both of them.
Julie, we've heard a lot from the Democrats about a threat to democracy, about election denials, about voter suppression. Can you reconcile any of that with the turnout and engagement that we're seeing in American elections?
Yeah, well, this is one of the catch-22s, I think, because the public will is still very strong right now for democracy. People are more engaged than ever in the U.S. We're breaking voter turnout records. And I think there's the sense of everyone wants to defend democracy, whether it's from the right in terms of election security, or from the left in terms of voter access. So I think each side thinks that they are the ones leading the charge to preserve democracy, somewhat ironically. I think the danger is when you have individuals like Trump, some of his allies who kind of exploit that passion for democracy to push lies about widespread election fraud and push misinformation on these things, because it is such a galvanizing and motivating thing for most Americans.
Julie Norman of the UCL Center on U.S. Politics. Julie, fantastic, as always. Bramwell, in certain aspects, both sides speaking past each other on the same issue.
Well, that's kind of an evergreen statement, I would argue. I would say that that's not just particularly in this issue. Did you see that over the past couple of days, this one Russian operative came out and conceded election interference by Russia in some of the online kind of communications? And I'm wondering how much that's fueling, forget the side, but fueling the speaking past each other and increased sort of partisanship and animosity that you feel in a lot of the rhetoric.
And that conversation likely to continue. Coming up shortly, Anna Ham of Wells Fargo on this equity market. Two-day rally, Friday, Monday, continues this Tuesday morning, up 0.4% on the S&P. Live from Washington, D.C. Heard on radio, seen on TV. This is Bloomberg.
NEC was started under President Clinton, and Bob Rubin was the first person to hold that job. Can you explain to people what it actually does and what the NEC does day to day? When, for example, who's in the NEC, who's on the NEC, what is your job actually to do?
So the National Economic Council the job, the mandate, the mission of the organization is to coordinate economic policy across the executive branch and across the cabinet to make sure that the president is getting the benefit of when making decisions of his entire economic cabinet, and also that the economic cabinet is getting clear direction from the president as well. So that two ways. So it's a coordination function. On the NEC itself are all of the relevant cabinet members, the sort of core economic team, OMB, Council of Economic Advisors, Treasury, but also Secretary of Labor, Secretary of Commerce. My team, the NEC team, is a small team within the White House that is, our job is to do that coordination across the range of economic policy issues.
Now, you were the deputy in the Obama administration at the NEC. Now you're the director. Which NEC worked better, the Obama administration one or the Biden one?
Well, on the issues that I worked on in the Obama administration, it worked very, very well. And the current NEC works very well as well.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
There is some built-in resilience that we're starting to see from the economies.
The consumer has the savings buffer. The savings buffer is coming down.
I don't think we're actually deglobalizing. I think we're just globalizing more slowly.
If you look at that labor force participation rate, it's still stubborn and it retreated last month. That is an issue because that suggests a bit more permanence.
This looks like a cycle that the Fed let get out of control.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Election Day in the United States of America, live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. TK, a rally into this one. 2-day winning streak, Friday, Monday, this Tuesday morning at 0.4%.
Rally into it, John. I like your idea from earlier that it's not about the inflation report or maybe disinflation, as Bruce Kasman alludes to at JP Morgan, but it is about the good news of gridlock. Maybe it means no tax lift. Maybe it means some, not plan, but some lack of damage from fiscal spending.
Or maybe even no more spending. And I think that's the point here, Tom, about divided government and why this market is so bullish. Is this a one-day event, or could this take another 4 weeks? Particularly, specifically, if we get a runoff in Georgia, we have to wait another month.
My reading of the last 24 hours is this is possible. I'm not going to predict it that we're going to roll into next week or into December, but you got to believe with 435 House seats, I've got a working number of 60. I believe it's one that are this way or that way or the other. Yeah, the math is there where you're going to have a couple hung seats in the House and maybe even in the Senate.
Lisa's going to go through the numbers in just a moment. Bramo, I don't think we should park CPI because once we get past this very quickly, we'll be focused on CPI Thursday.
Yeah, but I don't know if anyone on Wall Street's focused on that right now because they're all betting on the election outcome and they're trying to figure out what's going on. So maybe that's the reason why everything is range bound.
Come on, get it straight. They're all
what's that now? 2 billion?
1.9 billion, I believe, and heading higher. But
I think
buying tickets.
No, Anna Hahn's going to be with us. She's the quant who's done the work on Powerball.
Okay. I think that what the quants will tell you is it's not worth playing. Perhaps. perhaps. But,
Really?
You know, just in terms of the probability of you winning, Tom.
Okay.
Might be a waste of money. Please continue. You have permission to continue.
Thanks, I appreciate that. I was waiting for that all morning. I do wonder, though, going forward, once we get past this, whether there starts to be a little bit more of a reality check in terms of the numbers cohering with the action on the screen. I know I sound gloomy. I know I sound doomy. I know my monologues are always the same. But she's always gloomy.
It's okay.
But this is actually important because we're actually seeing downward revisions that are faster than people expected to 2023 earnings per share. We see a more hawkish Fed. Even Marko Kalanovic is on the border of pessimism about U.S. stocks. So I'm just saying, at what point will this translate into some price action?
I read Marko yesterday from JP Morgan talking up international. Perhaps. And UK stocks. I saw that too, but I think that's the international story listed in the UK as opposed to buying the UK economy, but we can have that discussion another time. Equities look like this on election day in America. Lift. Equity futures up. Monday, rally. Tuesday, will we get more of the same? Equities up 1/3%. Yields lower by a basis point, 420. I like seeing euro dollar just there on parity, just there. At least of just 1.0000. It feels like that's how it's meant to be now.
Yeah, it also feels, again, like the stasis that the market is today, right? This churn and lack of conviction one way or another. It's just flatlined. Anyway, okay, here's what we're looking at today. Midterm elections. I'm curious about which seats are actually up for grabs. Tom, what did you say, 60?
I saw a working number of 61. Those are the lean this way, lean that way, and the real ones in the middle. I think your number was more the real ones in the middle, which David Weston and our team will be looking at 10 p.m., 11, 2. Is Weston here till 2 a.m. tomorrow?
Probably.
Is he really?
I think so, yeah. It could be, hung.
That sounds like torture.
Long. No, I didn't say that. I said it's going to be a long night.
Well,
2 a.m.
Torture perhaps will be the 33 races that the Cook political report has been saying is toss-ups. Okay, let's get there. We do have auctions today. $40 billion of 3-year notes, definitely on the forefront of everybody's minds today. I am curious about what we're going to see with respect to yields. It's not the most important auction ever, but it comes at a time when there is this growing expectation of pressure on the Federal Reserve and how much pushback there's going to be to really take off some of the hawkish tilt that you've seen, with yields climbing to around the highest going back to 2007. And aftermarket, the earnings does kind of trickle to a close. About 9/10 of all S&P companies have reported. Disney and AMC among those that are going to be reporting. AMC is going to be interesting. Does it matter what the earnings actually are, John, or is it basically just going to be, if there are enough people saying to buy it, buy it?
I have to say it was the one surprising thing through COVID. If you've asked me if I'd ever go back to the movie theater again, I might have said no. I've been back to the movie theater quite a few times.
Really? You have?
Yeah. Yeah.
To watch what?
Top Gun, Maverick.
Oh, yeah.
I think I've watched that movie now about 4 times. And I went to watch another one recently with Margot Robbie, and I forgot what it's called. Is it Amsterdam?
Something like that. I don't know. I haven't been.
That was great.
But yeah.
You made it to the movies?
No, I've been to the movie theater in like 15 years.
All right.
I mean, I just don't
get
it.
Don't fancy it. You don't get it.
No, I don't get
What's there to get?
I just think
room, lots of seats, big screen.
I like
sit
resolution.
There, watch
and
it.
The answers we've.
Okay, Anna Han joined us now, equity strategist at Wells Fargo Securities. Anna,
she'll save us.
Saving us right now. Great to have you with us on the program. Anna, talk to me about the view that your clients expect and the outcome that you think will be the most bullish for this equity market from the midterms later.
Well, what's more bullish for the market or what the most likely outcome here? They don't necessarily go hand in hand, but in this case, we may be looking at an ideal scenario. Like you guys were discussing earlier, gridlock. We like gridlock because it gives us certainty in a sense. And even if it's not the best news, being able to prepare for it, for example, and like in the earnings season, these are the kind of things that help equities stabilize. And I think that with the gridlock we're expecting, it's going to help put some upward boost on the equity market.
And Han, I've been dying to talk to you since the death of the Nobel laureate Ed Prescott. He died of Arizona State University, and he's one that brought physics to economics a good 34 years ago. He talked about the moments, the torque, the tensions within the economy. Bring it over right now to the cross moments in your equity space. What do they tell you? Variance, kurtosis, the rest of it, skew. What do they tell you about this unusual moment?
I think it's telling you what Lisa mentioned earlier, is that the conviction, we're lacking really strong conviction, and that adds to the variance or the volatility of the market. But in these kind of times, it's very frustrating and could be easy to be lost. Where we want to do is position where we think on average you can perform best. And right now that style has been momentum. Rather than get too holed up in one sector or too concentration in a portfolio, if we look sector neutrally and we look at more of a style that we're looking for, it's high momentum. And that high momentum plays have tended to be those with more reasonable growth. And at the same time, those growth opportunities in a slowing economy and a recession that we expect next year, that's an approach that we'll put our money for.
And when you look at a little bit longer term, the question that we've been asking repeatedly is, longer term, is gridlock really good for stocks? How do you game out the longer term ramifications of a withdrawal of fiscal spending, regardless of exactly what happens in all of the contested elections that we're getting today?
You bring up a great point, Lisa. And when we look back historically at previous gridlocks or what we call split elections, we've noticed that there has been some good performance in the 1, 3, and the 6 month. But once you start getting outside of that, I think what we start introducing is more, what was the economic status of the economy at the time? And that's really, you start introducing those other variables, and you start seeing a little more variance, as we mentioned before, in the outcomes. So in that kind of scenario, where we are today is generally consensus is we start seeing that slowing down of a tightening policy. Eventually, we'll start seeing cuts. And in a recession, what kind of economic stance do you want to take? And for us, you can take that low volatility, more defensive approach, but really it's going to be that struggle of finding growth that can continue to put up numbers, especially after what looks like a bit of a weak earnings season.
Anna, thank you. As always, Anna Han there of Wells Fargo Securities. I think we've all heard the same lines over the last few months about midterm seasonality, about the third year of a presidency being the best year for this equity market. Lisa, when you speak to people about that, it just feels different because of what the Federal Reserve is doing this time around. It feels very, very different.
I couldn't agree more. We're talking about inflation we have not seen since the early 1980s. We're talking about a potential deglobalization that we haven't seen ever, because we haven't really seen this kind of pullback from some of the trade negotiations, at least in modern history. How do you then factor that into some sense of normalcy that you're expecting to reassert itself with a political trend in times of year?
Think about the doubts we've had about the rate hiking cycle so far this year. Through the first quarter, we were basically at zero for the whole of the first quarter of 2022. We had doubts about getting Fed funds up to 2% this year, then doubts about getting to 3%, doubts about getting to 4%. And ultimately, if you said to anybody we could go through 5% on Fed funds, Tom, in the next 12, 18 months, laughed out of the room. That's all changed. I'd throw another one in there. Can you imagine me saying to you, Tom, at the start of the year that a week before the midterms, the Fed would hike 75 basis points? What would you have said to me?
Unthinkable.
What has happened?
Unthinkable. Arthur Burns, unthinkable. What's happened here is they're amending on an ex post basis to what they observe. I spoke to David Rosenberg yesterday out front with the disinflation story. He made clear right now, ex rent, ex energy, a lot of inflation mandates are down at 0%, maybe above 0% a little bit. I think what's important here into this election, into this third year, as you correctly state, there's massive unknowns about the inflation story.
Rosie's asking the right question, I think, when it comes to inflation. And we should all debate it. Can it fall as quickly as it rose? And we've talked about the chip business. Think of Intel, think of Qualcomm right now. They've gone from demand, can't make enough of the stuff, to, oh dear, maybe we've made too much and we need to deliver cuts. Cuts to spending, cuts to hiring, cuts to the workforce. That's a major change as well in just a few months.
The problem with it decelerating as quickly as it picked up is we're still dealing with some of the same issues with supply chain disruptions, whether it's China, whether it's the war in Ukraine, perhaps for different reasons, but that hasn't been completely solved yet.
I'd go one step further. We're solving the issues of the previous 12 months, and now we've got new ones because they're spreading.
Exactly.
It's got broader, it's got stickier. From Washington, D.C., an equity market that's rallying on the NASDAQ by 0.6%, the S&P 500 a bit higher also. On election day in America, heard on radio, seen on TV. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Millions of Americans delivering their verdict today. They'll decide whether Democrats or Republicans have the right ideas to guide the U.S. through inflation, a possible recession, and splits on cultural and social issues. If Republicans gain control of Congress, or even just one of the two chambers, President Biden's agenda would grind to a halt. Donald Trump has all but confirmed his widely anticipated third run for the White House. He told a rally in Ohio he would be making a, quote, very big announcement next Tuesday at his estate in Florida. The former president is hoping to take advantage of good election results for Republicans. And when it comes to its future sources of energy, Ireland is banking on wind. Prime Minister Miguel Martin spoke to Bloomberg at the UN Climate Change Summit in Egypt.
We have a great asset, it's wind, and wind off the shore in Ireland is particularly strong, and we are in a position by 2030 to have 80% of all electricity generated by wind.
Martin also said that there needs to be new financial tools to help countries deal with weather disasters. Bloomberg's learned that the European Union is preparing to impose more sanctions on Iran over a deadly crackdown on protests. The proposals would target several Iranian individuals and entities. Nationwide protests began in Iran in September after the death of a young woman who had been detained by police for allegedly breaking Islamic dress codes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Today, what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Tonight, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections.
We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tomorrow, tune into Surveillance live from D.C. at 6 a.m. for the latest overnight. This is Bloomberg.
Midterm elections are about a referendum on the party in power in the White House. Most of the time, that party loses seats. You know, when you have such division, you're going to switch control of the chambers a lot more frequently. You know, 20, 30 years ago, we didn't have as much division, and so, you know, it's harder to flip control.
Wendy Schiller there, the director of the Taubman Center for American Politics and Policy at Brown University. Equities look like this in the equity market. On the S&P 500, futures advancing. On the S&P, on the NASDAQ too, with yields looking a little something like this as well, 421.81 on a 10-year. Right now, equity futures up 0.2%. Euro dollar, a small break of parity at 99.90. We're negative 1/3%. Tweet of the morning. Won't reveal the name because I don't know if he wants me to, but here's the tweet. Tough decision. Do I vote for the party who nominated Jay Powell for Fed chair or the party who renominated Jay Powell for Fed chair? Tom saw that tweet about 2 minutes ago. Thanks for paying attention.
I am.
Cheers.
I am.
Appreciate it. Do you want this one too?
No,
Do you want the chances of winning the Powerball? 1 in 292.2
Yeah, I heard that.
million. Cash values 585 after tax. Try it in some places.
Seriously,
someone was pretty
Powell.
sweary at me on Twitter about the odds for Powerball because actually it's 1 in 292 million and the cash value could be 585 as a lump sum in some states. So perhaps it is worth it just to take a punt. That was from someone on Twitter. The next line's pretty sweary, so I'm not going to
But to your
read
point
it out.
on Powell, what does he want out of this election? That really has not been addressed.
Oh, I don't think he wants to address that, Tom. But I think they'd love some certainty on fiscal policy so they can get their act together.
That's on the QT side.
The view on Wall Street, and let's go through it piece by piece, and I've gone through the caveats around it because I don't 100% buy into it, and I don't think everybody does either. There is a consensus view on Wall Street that divided government is good because you'll have fiscal policy that is restrained, and that means we can get a better idea about monetary policy. All of this is about policy clarity. That's all it's about.
And QT clarity.
That's all it's about. I don't think we've got any clarity on QT.
Exactly.
Does that
Maybe we
continue
get
into
some out of this.
2023? No idea.
Right now, joining us from Arkansas, he's been a wonderful support to the show. His name is French Hill. He is the Republican from Arkansas, waiting for election results tonight. I don't know, French, if I can say widely presume, but at least I can say in the zeitgeist is a Republican victory. French Hill, will the victory tonight be like the shock that we saw in 1994?
Well, Tom, Lisa, Jonathan, great to be with you. You know, I don't think it will be the shock we had in 1994 because Republicans hadn't been in charge in the House of Representatives for 40 years at that point. So we've seen the House flip before in the last decade. House Republicans are ready to lead on trying to control inflation, go back to pre-pandemic spending priorities, lead on unleashing American energy, and focusing on security in our communities, at the border, and the challenges that we face around the world as the largest superpower.
How is your party in majority in the House distracted by former President Trump, who has every right to run again, but distracted by that moment?
Well, President Trump is a fighter. President Trump has strong views, and there's no doubt that members of Congress, many members of Congress, follow his views on topics. And so if he weighs in on a topic in the midst of a debate in the House, I don't have any doubt that he would have influence inside the Republican Party. Look, that's the mission of Kevin McCarthy, who I expect to be elected as the Speaker of the House if the Republicans take control tonight. And Kevin will have that responsibility to build a consensus among a majority of Republican members on how to go forward on these critical issues.
French, there's an assumption in markets and beyond, certainly in Europe, that Republicans right now are less excited about continuing some of the aid to Ukraine and want to focus more on reducing inflation domestically, on keeping natural gas here in the United States. What's your view on that? Should there be some sort of restriction on exports if prices do rise beyond a certain amount?
Well, we do face a tough winter in energy markets with rising prices, and we don't have supply where we want it. I think the president's proposal of cutting the strategic petroleum reserve by 200 million barrels down to a 1984 level was a bad and dangerous policy, and this is exactly why, Lisa, because that strategic petroleum reserve is in case of major shortage and impact on the U.S. So I think he's contributed to this energy crisis this winter by that decision.
In all fairness, though, natural gas is a different story, right? And the natural gas exports from the U.S. is really what's in question, because that's really what Europe and Germany in particular really needs right now. So what would your stance be on the threshold to restrict some of those exports?
Well, I wouldn't restrict exports unless we were in an absolute energy emergency here, which we have. We need to be smart about, and that's why I raised the reserve on the oil side. But look, Europe needs natural gas, and Joe Biden's been terrible on producing natural gas here. He's taken a lot of decisions that have made it very hard to get our energy industry back up to pre-pandemic production, and with a positive outlook that production will produce a solid internal rate of return in the future, because we need to be having our natural gas here, but we need to be exporting natural gas in this energy crisis to our allies in Europe.
Congressman, isn't the damage done? Even if we get a Republican Congress from these midterms, if you're an oil producer right now trying to make multi-decade decisions, as far as they're concerned, isn't this story over?
Well, I don't think so, Jonathan. I think we have to be for an all-of-the-above energy policy during this transition, whether you're in Europe or the United States or in Asia. We need to be moving to natural gas from coal. We need to be investing in nuclear. And we need to have our energy companies recognize, and governments have to recognize, that it takes 100 million barrel a day equivalent to run the global industrial economy, and to prematurely cut that back or injure it without the offsetting cleaner alternatives, you're in trouble as an economy. And the third world will pay the highest price, not only from exporting America's inflation, but by these policies that curtail the use of energy in the third world.
Congressman, fantastic to catch up with you, sir. French Hill, as always, on Bloomberg
You bet, John.
Surveillance.
Great to be with you.
Thank you, sir. Coming up at 8:15, we'll be catching up with Congressman Peter Welch, the Democrat from Vermont. Looking forward to that conversation as well. Lisa, just briefly, what did you make of those final comments on energy just there?
It's a very difficult thing, because we've heard from the likes of a host of analysts saying that Wall Street doesn't want to invest. So how do you get an investment longer term when you have policies that are inconsistent but definitely moving away from fossil fuels for those investments that he's asking for?
I just struggle with this analysis. I think the outcome of one midterm election is not going to give these oil producers the clarity to make multi-decade decisions. That's troublesome.
I think a lot of people would agree, which is the reason why you're not necessarily seeing Wall Street open the purse strings as well and help the cause.
Coming up, Mark McCormick, the Global Head of FX Strategy at TD Securities. Looking forward to that conversation with euro-dollar in and around parity at 99.95. Equity futures up by 0.2% on Election Day in America. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Election day in America, equities shaping up as follows. On the S&P 500, just about positive, up a little more than 0.1%. On the Nasdaq 100, positive also. In the bond market, we look a little something like this. On 2s, 10s and 30s, your 10-year yield is down by not even a basis point at 421.18. Your 2-year, 472. Remember, shortly after the payrolls, for a heartbeat, we got very close to 480 on a 2-year shortly after the payrolls report. Then we backed away. 472 now, still levels. If you take out last week, levels we haven't seen since 2007. In the FX market, look a little something like this. Bit of weakness for the US dollar recently. Euro dollar back down below parity, down 1/3%. Tom, 99.91 on euro dollar.
Off the last number of days, I'd say off the radar after an exhausting 3 months in the dollar market. We're going to get a briefing here as we move to the election. I guess with the election angle, it's just simply a belief in strong or resilient dollar, and we'll just have to see, John.
Yeah.
It's just plain and simple.
You take it over the last 3 days, Lisa. What is it, euro dollar? Worst 3-day period going back to 2020.
Yeah.
I didn't know until TK said it. Didn't realize that's how much
Well, I didn't know
weakness
until
we've
I
seen.
read it somewhere. I steal from anybody every time I can. You know.
The amazing
Good
thing
for
is
you.
it's not even that much.
It's a secret.
You're just going to keep going.
The secret is that you steal.
That's what makes it amazing.
We should state to people that our day starts about 1 a.m., maybe 2 a.m., because as global Wall Street's writing, particularly in London, in their morning, we have to keep up.
Well, and I will say that the dollar has been one big headwind for a number of stocks, although I wouldn't necessarily say it's because of the stocks that I'm looking at. What I think is interesting as we get to the end of the earnings season, John, Tom, is the sense of consolidation among the biggest and the strongest players. And that is what we're seeing. The strongest continue to do well, and the losers are significantly losing. Lyft shares down more than 16% after reporting earnings that were somewhat disappointing in terms of how much they grew their ridership. How much is this because of that disappointment? How much is this because Lyft is losing to Uber? That you're seeing Uber consolidate a lot of the market share.
Is that the consensus view? Lyft is losing to Uber? Is that
which is the reason why shares of Lyft before this move were down 66% so far this year. Again, you're seeing that story with TripAdvisor. TripAdvisor shares are down more than 20% in pre-market trading after reporting earnings that disappointed with disappointing guidelines, even though you're seeing the airlines post some pretty insignificant gains. People are still traveling. TripAdvisor is not getting that, partly because of Viator and a whole host of other things. But again, consolidation among the strongest and big losers among the weaker ones. And Disney going to be reporting earnings after the bell, shares up about 0.5%. I'm just curious to see what the investment is like in content. Remember, Tom, we were talking about peak content, that content is king, but then at a certain point, maybe not so much.
You know, Paul Sweeney's expert on this. I'll be with him at 9 a.m. on radio this morning, and he just says the gloom crew got it wrong. It's more gloomy than even the gloom thought.
Do you want my
He
rant?
looks at Warner Brother Discovery,
Sure.
the Roberts family, Comcast, and the rest, and he says it is brutal.
Disney, Hulu. You ready for this? I got a Dear John email from Hulu the other day. The price of Hulu is going up to $82.99 from $75.99. Didn't we cut the cord because of cable costs? And this is what the package costs. I have to be clear, I've talked about this before. I cut the cord because I like the look of the TV without the cables and the box.
We all know.
We talked
It's
about that
aesthetic,
before.
yes.
But the price of that is ridiculous now, Tom. The price of that, you throw in some fast, high-speed broadband in New York City, and all of a sudden you're paying some significant money to get broadband and live TV.
He's looking for bundling and what kind of bundles will actually work and can you get something. So you're basically saying anyone out there who wants to bundle something and offer you a price.
I just don't need the box anymore.
Yeah.
I know they do the streaming themselves. Just, give me the bundle and I'll pay for that. And
Well, they tried that.
Without
and
the
it
strings
didn't
attached.
work.
Literally without the strings attached.
No cables.
Yeah,
Just
exactly.
nice.
It is a wild west. I mean, that is the
It's
way
ridiculous.
to look at it. And I defer to Sweeney, who's truly globally known on this. And the answer is, we don't know. We'll talk to Michael Nathanson, Rich Greenfield, and others about this. Right now in foreign exchange, and we've paused the last number of days, and we take great pride in how we cover the dollar in foreign exchange here at Bloomberg Surveillance. And we are advantaged by Mark McCormick. He's global head of FX strategy at TD Securities. He's been incredibly on about resilient dollar. Mark McCormick, on election day, let's start there. Do you believe in a strong dollar?
Yeah, we still think the strong dollar theme is in play here, and I think we have until probably maybe Q2 of next year. I think one of the things that you think about, three themes that matter for the dollar. It's global growth, which is Europe and Asia. It's basically the Fed's terminal rate exploration, which has actually gotten more hawkish and stronger for the dollar, and the global terms of trade shock, which is something we still have to deal with through the winter in Europe. So I think what's interesting is that while markets have kind of pivoting away from the dollar resilience recently, especially the last 2 weeks, most of the things that we're tracking that look at underlying growth and Chinese growth and European growth, these things have gotten worse in the last 2 months or so. So I think you take that along with the Fed being more hawkish and our expectations of a 5.5% terminal rate into Q2 of next year, we still have what feels like an environment where you should be fading the dollar weakness right now.
How has your world changed with a risk-free rate, as Taleb says, with the gravity returning to physics, the carry trades, the mathematics changes? Explain that to our audience.
Yeah, the carry trade, I think, is a simple way. Most people, I think, classify it as dollar cash is king. No one wants to take duration risk. Equities, if you look at Sharpe ratio, how things are doing relative to volatility has plummeted. So if you look at a risk-free asset at the front end of the U.S. curve, adjusted for inflation, you are compensated better than you would in other asset classes. So the easiest way to think about the dollar is it offers great risk-return profile in cash, and it's also a great hedge to stagflation or what you would call basically underperformance in equities.
I'm going to ask the dumb question of the day, Mark. But earlier today, John and Tom were asking, why is the dollar weakening? Why have we had 3 days of the biggest weakening going back to March of 2020? And I just reject it outright as any kind of trend that you can give a narrative to. Do you think that there is something that people are buying into that's behind this?
Yeah, so I spent the last week traveling, meeting clients across Europe, and the number one thing that people were asking about is China. And then you had like a series of interesting headlines. Some of them didn't really have much flavor to it, but it basically pointed in a direction. And then you had the big news on Friday that there could be some movement towards an mRNA-based vaccine moving in China. I think the big hope for people is that China can durably reopen sooner than what markets were anticipating. I think it's a bit of a red herring. I think we're not heading in that direction where China can convincingly reopen very aggressively very soon, given the low vaccine uptake. But I think that is a big part of the narrative. And the other side of it is the terms of trade shock in Europe looks a little bit better than it did months ago. The fill levels are high for natural gas. Energy forwards have kind of collapsed a bit. And if you look at even within our models, the terms of trade has improved, but that does not really get us through the flow concept of where we need to go through for the winter. So I do think there's been some positive news as you look to Europe and particularly Asia, but it's really, to me, it's not strong enough and yet convincing enough to kind of change the macroeconomic fundamentals, which still favor the dollar, especially on the Fed side now, since it looks like they've gotten even more hawkish last week.
Mark, I want to sit on the first point, that this could be due to the prospect of China reopening. How much could that cause the dollar to weaken? How dramatic of a move do you expect if there is some sort of material shift toward relaxing COVID zero in China?
It's a great question. As a risk analysis, I'd say we look at our global stagflation proxy, and dollar's about 6% overvalued in broad terms, so you include G10 emerging markets. Also, if you look at it relative to stress and stagflation, it is about, I'd say, 6 to 10% overvalued. So if we do get the reopening in China, and it seems like it's confirmed, there's mRNA vaccines going, and they're going to open the floodgates in Q2, that would be a significant decline in the dollar. We are forecasting about a 10-15% drop in the dollar towards the back half of 2023, but we're coming into it from what would be stronger levels. So that, against our base case, that would be significant. I think you could see the dollar drop another 5-6% in the next couple of months if China were to reopen.
Wow. There's a call. Mark McCormick at TD looking for dollar weakness off the back of a China reopening if we get one. Goldman was talking about a 20% rally in Chinese equities if we got one. Some big calls here. Mark, thank you. I want to spend a bit of time going through something Mohammed Al-Arian has just put out on Twitter, because I think it's a series of important points that he's trying to make. The conventional wisdom is, understandably, that the consensus forecast of a gridlock America after today's midterms will keep the government out of the way of markets. He goes on to say, yet the economic context calls for smart government policies for vulnerable segments of the population, for global policy leadership, etc., to help enhance the economy's ability to grow strongly, sustainably, and inclusively, especially as a late Fed seeks to contain inflation. The two combined means that a gridlock would quickly shift attention to the next election in 2 years, and that the length and depth of a possible recession would have quite an influence. Now, I want to pick up on that final point. A lot of people talk about short and shallow. And the reason they say shallow is because they don't believe we've built up enough excess over the last couple of years, which would deliver a deep downturn. But on the short side of things, Tom, I think that if you don't have any kind of counter-cyclical circuit breaker from fiscal or from monetary policy, I think the debate's a little bit more wide open when it comes to a duration of a downturn.
Absolutely original debate right now. It's completely opposite of any other measurement of the double recession of Volcker or the 2001, I believe it was, mini recession we almost had. To push against what Professor Al-Arian is saying, I would suggest Washington badly likes gridlock because gridlock raises money. And to me, that's the beast that is where we are, and they will be enthused to have gridlock because it'll give them a reason to earn the marginal $1 million of donations.
I remember when I was in political science classes in college, and I used to get really frustrated because it was just so messy and nothing ever got done, and it felt like it was inefficient. And someone once said to me, inefficiency is the reason why the country works, because when you have something that's too efficient, you get a radicalization of a government.
Call that the British approach.
So there is something to be said for some kind of back and forth and gridlock. The problem is when there needs to be a fiscal response, where is the honest discussion about how to achieve the best outcome without trying to push some sort of partisan 2-year cycle?
I wondered how many digs you'd take at the British system whilst we were here.
She's talking about it. I mean, that's how we invented
I wasn't
this.
talking about the British system.
It wasn't you, Lisa.
Madison turned to Jefferson and said, we need gridlock, Tom.
Equities, you were there, up a tenth of 1% on the S&P. Live from Washington, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. votes today in elections that will decide which party controls Congress. Millions cast their ballots in advance. Republicans feel good about their chances to capture both chambers. President Biden admits it will be tougher for Democrats to retain the House than the Senate. Close races mean it could be days before the final result is determined. Donald Trump says he wants nothing to distract from the importance of today's midterm elections, so he's holding off until next week before making what he calls a very big announcement. The former president is expected to declare he'll make a third bid for the White House. And the former governor of the Bank of England says renewable energy assets are set for an era of growth. Mark Carney spoke to Bloomberg at the UN Climate Change Summit in Egypt.
there's an absolute wall of opportunity in just rolling out clean energy at scale. I'll give you one fact. I work at Brookfield part-time, and we have gone from 20 gigawatts in our pipeline of building out renewables to over 100 in just 12 months. That gives you a sense of how fast things are moving.
Carney is now the co-chair of the Glasgow Financial Alliance for Net Zero. In China, hopes are fading that authorities will lift a lockdown of the area surrounding the world's largest iPhone factory. COVID cases have more than doubled in the city of Zhengzhou. A 7-day lockdown of the area that houses Apple's global iPhone production base expires on Wednesday. The local government may extend the curbs. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
is going to be crucial for this election cycle to go somewhat smoothly for Americans to just have trust in the system again. Inflation is driving the votes, but we still have these broader concerns about what this means for the system and if we can restore that faith.
Wonderful to hear from Julie Norman, the UCL Center on U.S. Politics co-director, live from Washington. Equities just about positive on the S&P 500, up a little more than 1/10% on the S&P. In the bond market, we look like this. Yields lower by, let's call it a basis point, Tom, on a 10-year, 420.54. Euro dollar 99.93, negative 1/3%. And crude is getting a ton of attention in this election.
Yeah.
What's happening in the energy market? WTI $91, and let's call it 10 cents. We're down, Tom, by 0.75%.
It made a dash, and then it's pulled back, but still, I would suggest for a huge body of Americans, and I looked at this yesterday, from 2019, price up in nat gas, as Steve Shork mentioned, price up in diesel and heating oil, gallon of gas up, I can't remember the number, I'll say it's 100%. Plus, these are huge, huge moves.
It's a massive, massive task to try and reconcile the two messages coming out of the administration right now, which is one, drill more, and two, no more drilling. That's a difficult one to thread.
It is, and even in the last couple of days out on Twitter, there's been discussion of our interview with Secretary Granholm
of 12 months ago.
Of a long, long time ago. And for the people that are, I'm going to say, pro-hydrocarbon as a general statement, they haven't forgotten. You know, that's all there is to it.
I don't think we have. A year ago, that was a bizarre conversation.
Well, we've had a
12 months
few.
ago.
We've had a few.
That was up there.
Yeah, both Republicans and Democrats. We've been fair and balanced about it.
A strange time.
Actually, with the conversations that John and I have with Lisa, you know, it can get bizarre as well.
It's a strange show, TK.
Can we move on, please?
Abramowitz says move on.
We're just having a moment. It's just a moment.
Saving us today, Anne-Marie Horton, Bloomberg, Washington correspondent. Anne-Marie, as usual on Election Day, the writings are extraordinary. There's any number of people out at any number of news organizations. I always turn to Matt Bai. He's at the Washington Post with a terrific essay today that the Democrats have to stop with the navel-gazing. There is no, his book, The Argument from years ago, there is no argument. It's the time they live in. For the Democrats, it was the cards they were dealt.
Well, at the moment, it is the cards they're dealt in terms of, I mean, if you're talking about the energy story, that's one of them. They came into this administration with a rhetoric that did not match the moment 12 months later, which was the fact that there was an invasion of Ukraine. They were taking out a commodity superstore that's in Russia. And speaking of energy prices, today on Election Day, they're actually busted out of the 70s. It's 3.80 in average. And this is something the White House is obsessed with because this has reflected the president's poll numbers.
What about the Republicans in that Mr. Trump is out again talking of November 15th and such? What is the argument and where there's really no message for them? They have to live with the cards the Republicans were dealt.
Yeah, they have to live with the fact that he is still the highest ranking and the leader of their party, and many of them would like to put that era behind them, but they just can't. He's out there at rallies for these individuals he's campaigning for that many in the Republican Party would not like to see, and he is going to announce a bid for the White House.
Is he going to say the governor of Florida is a Republican in name only?
We don't know. Right now, all the thing he's saying that he's Ron DeSanctimonious. That's his name for him. He hasn't said he's a rhino yet, but he is giving him a nickname. So maybe we're one step there.
We're one step there.
Anne-Marie, just picking up on the point that you made about gasoline prices and oil, I am curious about the U.S. relationship with Riyadh, with OPEC Plus, especially as we see those prices continue to rise. OPEC Plus today defending some of their supply cuts because they are becoming more into focus now that prices are rising again. How strained is that relationship? What is the implication for policy, given your deep knowledge, I know, of Riyadh as well as the U.S.?
So when it comes to the oil market, the U.S., and after that cut, they said that they were going to recalibrate and review. But then we had a story I worked on, and this was after the Wall Street Journal reported it, that the Saudi and the U.S. were sharing intelligence about a potential imminent threat from Iran. So you do see that on some level the communication flow has not stopped. But obviously this has been an acrimonious relationship between the Biden administration, who wanted to make this country a pariah, and the Saudis. But the Saudis are going to defend, and Prince Abdulaziz did this the other day at the FII, quoting a story I wrote that when I was there before the lockdown of all these governments, he said you can either take a fire hose to a house, right? Save the house, but you still have your furniture, or you call the fire brigade and you ruin everything, but you save the structure. And that's what he wanted to do. And I think that's what he was trying to get at in this cut, that they needed to make the cut now because China was still locked down and there are recessionary fears.
There is a defensiveness. Oman's minister came out this morning just crossing the OPEC plus cuts have balanced the oil markets and prices. This is their argument, right? And then also saying that OPEC plus can respond more if prices do rise. What is the trigger point and what's the pushback that you get both internally as well as just internationally, given the frayed relationship and given the reluctance to really let prices go too low?
Well, OPEC doesn't think the physical market right now reflects what's going on in the paper market. But also, we have to remember, December 5th is a really key date for the oil market, which means that is when, if there is no price cap, we could potentially see shut-ins on Russian oil. Right now, Russian oil is still flowing, but December 5th, that might be impacted. And you could argue that some of these OPEC countries, like Saudi Arabia, which was pumping at capacity for months, wanted to maybe take a break. Some others maybe rest their fields so they have some dry powder when this happens in December and if prices do spike because of this.
Politically, November is going to turn out to be really interesting, not just because of energy, but also the outcome of those negotiations between the administration supporting the railroad unions and the agreement, the tentative agreement that we had about a month or so ago, which hasn't been signed by all 12 unions.
No.
And I believe we could have some activity there perhaps in the next couple of weeks.
It could mean strikes, potentially. And that would mean issues of, especially for things like food, also become incredibly dangerous. Things like pneumonia just can't be sitting on a railroad.
Right.
Not just that in November. One more deal we're waiting on, November 19th. This is the grain deal, the Black Sea grain deal, whether or not that's going to continue or not.
Right.
That is crucial for food inflation.
20 seconds. Are unions voting Republican or Democrat?
I think they vote for the Democrat, Joe Biden. He is a union man, and we recently ran a piece about his inflation advisors, and really there's not been the outreach we've seen to labor leaders that we've ever seen under a president as we have under Joe Biden.
MH, thank you. Wonderful to be with Anne-Marie. And this is like
Welcome. It's so nice to have you guys here.
Casa Anne-Marie.
10 days.
You know,
Every 10 days.
we're in AMH's home.
Yeah, we are.
So it's, thank you for having us.
Every 10 days we should be here.
Great
Seriously.
breakfast here too. Have you noticed that?
Yeah.
Fantastic.
Well, this is
real,
the best
real
food.
upgrade on the
Seriously,
food.
this is
Real upgrade.
this is what matters
Real
is the
upgrade.
food in the Washington Bureau, folks. His overtaken Tokyo is the best in the Bloomberg world.
Frankfurt was up there too, you know.
Frankfurt was up
I always like Frankfurt. Fresh
Can I-
fruit, sliced fruit in the
Plus,
middle.
they have 3-hour lunches.
Can
Yeah,
I
good.
follow on to the sort of
haven't been to
the rail strikes?
Oh, you want to talk about something serious?
Well, it's not just the U.S. It's also in Canada. It's also
Yes.
in the U.K. And what is it about the rail system? I don't know. I think that's so interesting. I know we can keep talking.
We can talk about it in the break.
Okay, let's.
Futures right now, up
Yeah,
2
join
tenths
us in
on
the
the
break,
S&P.
folks.
Just real entertaining stuff in a commercial break. From Washington, D.C., this is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
Markets prefer gridlock generally to one party having control of all the levels of power.
Inflation will come down over the course of the next year.
It's also likely that future levels of inflation are more persistent.
What do we know so far about the inflation call? Everybody's gotten it wrong.
Fiscal stimulus from 2020 and 2021 is still going to act as a buffer for 2023 and 2024.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene from the nation's capital. It is Election Day, a midterm election. We're briefed it's not as important as a presidential election. John, in this environment coming out of this pandemic, I don't buy it for a minute. It's important.
Well, it certainly sets the stage for the next general election anyway, and I think that race has already started. Overwhelmingly on Wall Street, gridlock is the view. Gridlock is the view that's best for this market. There's been some pushback out there. We should highlight it. We should have that conversation. Mohamed El-Erian talking about the potential depth, breadth, and duration of a downturn without targeted fiscal policy in the year to come. And gridlock would prevent that from happening.
The uncertainty's there, and we're not going to do, what the other networks are doing, which is the play-by-play of Arizona or what's going on in Pennsylvania and that. But the value add, John, I think we can bring for our global Wall Street audience is the character of the gridlock around Washington policy and particularly what it means for the degrees of freedom the Fed has. They're limited with a difficult election
There's
today.
an additional dimension here as well. I think if you're on Wall Street, many people just want the event cleared. They want to get it out of the way, move on, focus on CPI. When you look at the polls in a place like Georgia at the moment, and we've discussed this over the last few weeks or so, it looks like that could go to a runoff. If it goes for a runoff, we're talking about another 4 weeks of this. So potentially, Tom, we don't clear that hurdle anytime soon.
Let's dovetail Thursday, 2 days out inflation report with what we see today. Inflation front and center. French Hill was with us from Arkansas, chicken through the moon like every other food group in the store.
Well, so yeah, chicken through the moon. A lot of things to put together, incredible imagery there. I am curious to see how the inflation report really affects the Republican discussion discussion point, especially taken away from the midterm elections. We were speaking with Congressman French Hill about the potential emergency in natural gas. If prices go too high, at what point do you start restricting exports? At what point do you start saying we can respond with more spending the way Germany is, or not? Because spending was what got into this to begin with.
Factoid of the morning for me was Stephen Short, John, saying with all that's going on, nat gas or some form of hydrocarbons in Europe is $600 a barrel equivalent. I mean, we've got it bad, but nothing like the economic and inflation dynamics of Europe.
Well, I think this is the important conversation we need to have. What's taking place over the next 24 hours has consequences not just for the next few weeks, but potentially for the next few years. And what we're looking at what happens in Europe right now, Tom, I think is really important because it's not about this winter. It's about next winter now. They got their storage levels up, and you can see that reflected in gas prices in Europe right now. They've rolled over, largely because storage is basically at capacity. Can you repeat the act that they engineered this winter, which is to get storage up by using Nord Stream? Where does the gas come from next winter to do the same thing?
Yeah,
tremendously difficult to do.
And not just that, but also how about all the other nations who haven't had the luxury of building up some of those stores? And I'm thinking of certain developing nations that are seeing their prices surge to record highs because Europe is sucking it all up.
And we haven't even talked about China, which is the only thing they agree on in Washington, I think, today, other than, you know, the line at the Starbucks will be long on an election day. John, let me get the data check started here. 4.71% on a 2-year yield. No one a year ago would have guessed that.
Well, let's talk about the equity market as well, because we've got a little bit of a rally coming into decision day. Friday, Monday, Tuesday morning, up another 0.25%. The turnaround of the bond market, 420.54, basically unchanged. But Tom, to your point, where were we 12 months ago? The change in this bond market has just been monstrous, delivered by this Fed.
And John, this is important. It's off the radar of politicians, but to their electorate of all different walks of life. The Pew Research Trust talks about 9 groups of Americans. All 9 groups are affected by this data.
So this is really important on the inflation point. We all know that inflation is a major point in this discussion around voting in America in the midterms. What's not completely clear to me is how many people blame the White House for that. Now, we know the Republicans do, but what about the Democrats? We have a nuanced conversation on programs like this. You've got the White House, you've got monetary policy, you've got the global supply constraints of the last couple of years and the pandemic and everything that's happened in places like Ukraine and Russia. It would be interesting to see who of the Democrats, who do they blame that on? Do they turn to the White House and do they blame it on the White House?
That's in the zeitgeist this morning. I mentioned Matt Bye in the Washington Post. I think David Weston will have a lot on this with our coverage that you'll see tonight beginning at 8 o'clock. Right now, we drive forward the conversation with a Beltway insider with Rock Creek Group. Alifia Dorwala joins us now, their managing director. Thank you so much for getting up. It's way too early for I mean, even on election day, Washington doesn't get up till 8:30, do they?
No, we're up. We're finance people, so we're up.
It's exciting. Explain election day in Washington. French Hill was in Arkansas, as he should be today. Is Washington deserted on election day?
You know, I don't know if it's as exciting as people want to think Washington is on election day. Everyone's working from home anyway, especially the government. So I don't know if we are getting a lot of excitement today. And I think markets are, as you said, pricing in a little bit of a split, Congress and what that means for markets.
What are the risks around that view? From your perspective, is that good or bad? Because we're told overwhelmingly it is good.
It could be in good. It could be, less inflationary pressure because you don't have as much fiscal spending. You could see a weaker dollar. All of those things could price into markets and, being a little bit more positive. But honestly, I do think that the midterm elections will just be a small blip in what we see in markets. Unfortunately, everyone's kind of probably sick and tired of hearing this, but it's all about inflation.
What's the longer-term consequence of the fiscal response probably not being there regardless of who gets elected into the White House, even in 2024?
Yeah, no, I think it's interesting because we don't talk a lot about the Inflation Reduction Act as well, right? And the investment implications of the IRA. We've been looking a lot and doing a lot of research to see what are the different areas that we can actually invest in that are going to get tailwinds from some of that IRA money. And there are places and there's pockets of opportunity there.
You manage cautious money, conservative money. If there's a new risk-free rate, I mentioned the 2-year yield where it is, how does that change? And I don't mean this on a direct pension basis, but how does it change the actuarial or return assumption of international money?
No, it's part of the building blocks of your capital market return assumptions, right? And we manage money for endowments, foundations, pensions. They want to have their money there in perpetuity. And so having, these type of rates in the fixed income market, we are talking so much more about how to manage our fixed income exposure. Right. One of the best trades now is putting your cash in 6-month T-bills.
How do you manage your fixed income losses of the last couple of years? Everybody's enjoyed that.
Yeah, the U.S. bond market is down about 16% this year, right? Equity markets are down about 25%. We've had a very diversified fixed income exposure. We've also included TIPS, gold, floating rate funds. There are a lot of pockets. We've stayed away from high yield. So we've been very short duration as well, which has actually helped us manage and limit our losses on the downside.
One thing we've been trying to work out is whether we operate with the underlying assumption that we're going to have Fed funds at, say, 3.5 to 5% for the next couple of years. Is that your basic assumption now?
It is our basic assumption right now, but we are looking very closely, right? And when the Fed's going to pause, when they're going to pivot, and that's going to completely change some of the rotation in terms of portfolios and where you want to be putting your money. You might want to be increasing your duration. You might want to be increasing your fixed income exposure. You're going to want to see where equities are in terms of valuations across the globe.
When do you think you'll see a 60-40 kind of portfolio start to reassert itself in a positive way?
I think, timeline, I think you're out at least 12, 18 months before you start to see any sort of appreciation in the 60-40 type of portfolio. And we're looking for just a diversified portfolio, a lot of alternatives today as well.
Where does the diversification come from then, if we're basically faced with a positive equity bond correlation for the foreseeable future? You talked about diversifying. Where does it come from?
So we have the advantage of being able to invest in private markets, right? And as much as we've seen valuations come down in private markets as well, they haven't come down as much in public markets. And there is so much innovation going on, and there are lots of sectors that are actually less cyclical, or less economically sensitive and less cyclical than what we're seeing in tech today. So we're investing in food, we're investing in ag, we're investing in climate-related areas, all things that we think are going to be 10-year fold investments.
Have private markets adjusted yet? When you look at them, have they really adjusted yet?
Well, private markets never adjust. That's the beauty of private markets, right?
Okay, but just because something doesn't trade doesn't mean that it doesn't go down in value. Do you think that anyone's going to have to sell and lock in the declines that people are? Yeah, that's the point.
So if you look at the venture side of things, right? If you look at some of the companies that are most well run, they have 18 to 24 months of runway in terms of cash. That's not bad. That could get you through a period where you don't have to go to market very soon. So there's going to be a bifurcation in terms of companies that have been able to manage their balance sheets well and those that haven't, even in the private markets.
Alethea, good to see you. As always, Alethea Doriwala there of Rock Creek Group. Did you call her a Boutway insider? I'm not sure. I'm not sure that Alethea wants to be called a Boutway. First thing she said was no finance.
What's internal rate of return?
We wake up early.
What's a new internal rate of return?
5%.
5%?
1%? I don't know. We're not super optimistic on the markets.
David Rubenstein when he's on.
Well, looking forward to that conversation.
You should ask him about private markets and why they never market.
We'll do that. Don't get up. We're still on air. Don't get up.
I think she's going away to ask Rubenstein about private markets. You tell him.
What are you selling?
That was very Brower-esque, wasn't it? You ask him why they're not. You should ask him that. Okay, I look forward to that. Coming up shortly, Congressman Peter Welch, Democrat from Vermont. Looking forward to that conversation. Tom, as we count down everybody to the final day of voting. We always call it Election Day, but it's been like Election Month, hasn't it? Hasn't it been like weeks of this?
And to the point of 730 days to the next election.
Election life.
Election life. I like
election
that.
life.
Steal that. Very good.
Lisa, I like that. Futures up 0.1% on the S&P 500. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Millions of Americans are delivering their verdict today. They'll decide whether Democrats or Republicans have the right ideas to guide the U.S. through inflation, a possible recession, and splits on cultural and social issues. If Republicans regain control of Congress, or even just one of the two chambers, President Biden's agenda would grind to a halt. Donald Trump has all but confirmed his widely anticipated third run for the White House. He told a rally in Ohio he would be making a, quote, very big announcement next Tuesday at his estate in Florida. The former president is hoping to take advantage of good election results for Republicans. The Prime Minister of Greece says his country is becoming a hub for importing green power to Europe. Kyriakos Mitsotakis spoke to Bloomberg at the Climate Change Summit in Egypt.
Made that is not going to change. What will change is diversity of supply when it comes to natural gas. We know we will need natural gas for the foreseeable future. Greece is becoming an energy hub to bring in liquefied natural gas, not just to cover our country's needs, but also to provide natural gas for the Balkans, for Central Europe. Why not for Ukraine?
Mitsotakis says Greece is working with Egypt on plans to build renewable power infrastructure and connections with Africa. And sales of Ferraris, Lamborghinis, and other supercars are booming in Japan. New registrations of cars costing more than $136,000 soared 64% in the first 9 months of the year. Sales are fueled by post-COVID lockdown demand from wealthy buyers who also see the cars as good investments. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Power. Policy. Politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Tonight, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections.
We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tomorrow, tune into Surveillance live from D.C. at 6 a.m. for the latest overnight. This is Bloomberg.
We've seen the House flip before in the last decade. House Republicans are ready to lead on trying to control inflation, go back to pre-pandemic spending priorities, lead on unleashing American energy, and focusing on security.
Congressman French Hill, the Republican from Arkansas, in the previous hour here on Bloomberg Surveillance, live from Washington, D.C. On Election Day, here's the price action on the S&P 500. About an hour and 12 minutes away from the opening bell, equities positive 0.2%. Yields going absolutely nowhere. Let's call it down 2 basis points, which I guess is somewhere. 419.07 on the 10-year. Euro dollar 99.94. We're negative 0.25%. Just a little bit of euro weakness and some dollar strength making a comeback after a few days of dollar weakness. Crude 91.39, Tom. We're negative 0.4% there.
On Election Day, John, and this has come up, I think Lisa's been great about this, talking about duration, this idea of time on the x-axis. And John, I think it's where you can link politicians in Election Day into what we do in economics, finance, investment, which is the duration of these trends. The politicians have to be asking, as a core idea, how long does it take to get inflation solved?
The persistence of the Federal Reserve, even if they do ultimately stop hiking interest rates, and that's the conversation of last week. What did Chairman Powell essentially tell us? He said slower but higher. And they've been telling us not just slower but higher, but also longer. So you've got slower but higher, but also longer. That's what the Fed's trying to signal.
And Lisa, the partition here for so many politicians is fuel costs, gallon of gas and all that. We know the drill. But also rents as well. And do you bundle them in? Do you manage them in a way away from disinflationary trends we may see that Washington doesn't care about?
Well, the problem is, what can any of these politicians really do single-handedly to offset a lot of these inflationary issues? So you're going to hear people come on and talk about different things, whether it's increasing production from the fossil fuels, whether it's trade agreements, and none of them are single-handedly going to bring down inflation because it is multifaceted. And so ultimately you have to say, where are the investments going? Where is the money on Wall Street going? And then also, what's the supply chain issue? What's the global issue that we're seeing and how quickly it gets resolved?
First Tuesday of November, actually second, who's counting? Wednesday, and then John, Thursday, inflation. Is this an inflation report that can truly change the Fed dialogue? I don't buy that.
You'd have to have a massive downside surprise. What are we looking for? Something just inside 8%, 7.9? You'd have to have a massive downside surprise to change the dialogue into December. And by the way, I think we have 2 more prints before the December Federal Reserve meeting, so not just the one.
To all of you on radio and television, it is our election coverage. We'll be here tomorrow morning. David Weston leading our coverage this evening. But we do touch on economics and certainly on the barometer of investment in finance, which is fixed income. Kelsey Barrow joins now, fixed income portfolio manager that barely describes the intelligence of her notes at J.P. Morgan Asset Management. Kelsey, I love the note, gaming out the duration that we're going to see. If we get to some form of J. Powell terminal rate, what is the length that we will be there for?
So historically, when the Fed reaches the terminal rate, they keep the policy rate at that level for about 7 to 12 months. And I think that it's reasonable to expect a similar duration this time around. So we expect the Fed to get to at least 4 3/4, if not 5, and then to hold it there. And the reason that they need to hold it there is that they need to see inflation come down So they get a significantly positive real Fed funds rate, because that's what our historical analysis shows us. It shows us that the Fed does not stop hiking until the real Fed funds rate, which is the Fed funds rate minus current inflation, is positive.
So what does that mean for investing in riskier assets, Kelsey? I mean, a lot of people have been talking about how this is going to kill a lot of momentum further in equities, but also in credit. And we're looking right now at high yield that has rallied sharply. DoubleLine came out and said that that they're actually seeing a real negative tilt to high yield. They're not going to touch high yield right now. Would you agree with that, that this is sort of a no-go because it has not appreciated the risks out there?
So if you look at the returns in high yield so far this year, the majority of the negative returns are being driven by higher risk-free rates, not by wider spreads. So I would agree we are maintaining a very cautious stance to high yield. And the other thing that I note that, we're not really focused on today, we're thinking about the midterms, we're thinking about inflation. But in the background, you have quantitative tightening, which is really just starting to ramp up. So I was looking back at this blog that I had written at the beginning of the year with a colleague, and at the time, the balance sheet was 8.7 trillion. It's just now getting back to 8.7 trillion. So we've only just round-tripped the expansion at the beginning of this year. And so we still have a lot more to go in terms of quantitative tightening. And I think that's really another reason to just stay cautious as it relates to the lower quality area within fixed income.
How much will any sell-off be accelerated by private markets that have not reset yet in terms of how much they're going to go down? You're hearing about fund managers saying, you promised us money, give it to us, and then people having to sell in order to give the capital. How much is that going to really accelerate the downturn in public markets that can be sold to raise capital for the private obligations?
So liquidity management is extremely important. And I think this is something we've been thinking about. We know that the high yield market is higher quality than it's been in the past, but those lower quality deals are going to the private market. And unfortunately, what may happen is the private market, because it's so illiquid, when people do need to raise the money, it's going to come from the public markets. And so even though the credit quality is higher than it is on average, you do need to think about that liquidity component. So for us, where we're really hiding out is still in the short maturity investment grade and securitized cash flows, when you can get 6 to 7% yield, break evens around 200 to 300 basis points. That is very attractive because we cannot lose sight of the fact that yields are materially higher. There is income in fixed income today. And where we need to start thinking about is where to be extending duration and adding to those core fixed income holdings.
Kelsey, you've been awesome recently, and it's great to hear from you. Kelsey Barrett there of JP Morgan Asset Management. Kelsey, thank you, as always. Kelsey, alongside Bob Michael at JP Morgan, Lisa, just a reluctance to engage risk and credit right now. They just do not believe we've seen the wides in this credit market, given what they think is still to come in this economy.
The interesting thing is other people disagree, and you're seeing high yield do really well, and you've seen a pretty significant rally over the past week or so in tandem with stocks. So who's on the other side of that?
Tom?
I would suggest their caution has been dead on. It's been a lot unspoken. They've just absolutely nailed the full faith in credit.
You've talked about the losses in fixed income.
Oh, don't get me going. You know how I feel about this. Forget about all this spread analysis. Price down, yield
hard.
Up. That's it.
Hard.
That's my sophistication.
From Washington, this is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Two-day winning streak on the S&P 500 into Tuesday. Gains on Friday, gains on Monday, gains this morning as well. Can we make it 3? Equity futures up 0.2% on the S&P over the previous 2 days. The S&P up by 2.34%. Yields are lower by a couple of basis points on a 10-year 4.1928. Crude is softer, lower, negative, down 1/3% at 91.50. And euro dollar, we've had some dollar weakness recently. Now a little bit of dollar strength against the euro. Euro dollar 99.97. TK on that currency pair negative 0.2%.
Interesting to see. I'm going to call it a quiet market here. And John, you and I are talking about this, and it is about the election. It's not just about mystery to the inflation report on Thursday. It's just like, let's see where we are tomorrow morning.
And see if we have to wait another 4 weeks for the outcome of Georgia, and ultimately for the outcome to understand whether we have gridlock or not.
There it is on economics, finance, and investment. Of course, here in Washington for 2 days, we are looking at elections. As we spoke to French Hill of Arkansas earlier, we go to the other side in arguably the most interesting Democrat Party experiment in America, and that is Vermont. I spoke with Senator Leahy a number of weeks ago, his wonderful new book out, The Path of Senator Leahy Over the Decades, and it's been a path shared by his colleague Peter Welch as well, Congressman, and of course in a dash for the Senate here on this Tuesday. So let me start with a Vermont tradition, Congressman. Will you vote early? Will you vote often?
Well, I'll vote early, but to vote often is a Chicago tradition. So just once and done here.
We'll leave that to Mayor Daley and the rest. I need to talk about the transformation of Vermont and what is unspoken. I remember White River Junction years and years ago, impoverished up the Connecticut River, and it is now bustling. It is a boom economy with an unemployment rate, I believe, under 2%. What is the Vermont pixie dust that makes for prosperity?
Well, White River is where I first came, 1974, and it was the town you described, and now it's doing extremely well. But, you know, I think there's a real civic tradition here where our businesses and our government have worked very well together in partnership. And we've had a commitment to our environment through Republican and Democratic governors. We've had a commitment to, in tough times, trying to support people who needed help. And then lower taxes when times were good. So there's, I think, been a very functional government here through Republican and Democratic administrations where there's been social liberalism and economic stewardship. And we pay our bills here in Vermont.
As time moves on, as Senator Sanders retires, Senator Leahy retires, do you suggest a Democratic Party that will move to a national center away from a more East Coast and West Coast liberality?
Well, you know, let's define that liberality. I think what has worked for us, and I think is good for the National Democratic Party, is to have a commitment to the environment and understanding that there's got to be partnerships between government and the private sector in order to get things done. And frankly, I think that's what you see with the Inflation Reduction Act on climate change, where there's a lot of tax incentives that's going to help create a market dynamic. And there's a good deal of civic cooperation here in Vermont, where people here listen more than they talk, where when we disagree with somebody, we don't assume bad motives. I mean, I actually think of the way we do things here in Vermont. We've got a Republican governor, and we've got a Democratic plus independent, of course, in Bernie Sanders in Congress, but where that mutual respect is something that we need. And we certainly don't have election deniers here in the state of Vermont.
But Congressman, talking about the green transition, there's been so much pushback of late because of the need to invest in fossil fuels in the near term. How do you dovetail a message that is supportive for the oil and gas that people rely on to heat their homes in a winter that's going to potentially be fraught with very high prices, with the idea that you need to invest long term, with the idea that people don't want to spend too much money in the face of inflation?
Well, no, you're exactly right. I mean, the bottom line here is if we're going to get to clean energy, and I think everybody knows we need to do that, it's got to be affordable. You know, if a person is going to want to get a truck and they want an F-150 electric, that ultimately has to be an affordable purchase for them. And that's in order for that to happen, and this has been the case in many other technological transformations, government policy plays a big role with tax incentives that then encourage private investment. We saw that with solar, the cost of panels coming way down, but that we are not yet there in some of these other areas like the electric vehicles. So I think the combination of public policy and incentives to make that gradual transition. But in the meantime, you know, if people are going to get through the winter, we got to make sure that they have affordable heating fuel. And that'll be a big issue for us, I think, when we return to Washington.
Congressman, are you worried about the perception of the Democratic Party as having gotten too extreme on the left side?
Well, certainly in the campaign, you know, the campaign reduces things down to kind of an absurd, narrow definition. And in fact, when you look at our record, there has been significant focus on economic development and jobs. And, you know, the big challenge we're facing right now is coming out of COVID. We've got inflation in this country, but we've got inflation around the world that's even worse than ours. And we've got to take the steps to bring it down. And the choice that we have here, this is what is going to await us tomorrow after we get the verdict of the voters. We've got history with this Republican Party, particularly in the House, where they're pretty extreme policies. And we'll be hearing a lot of talk about getting government spending under control by reducing Social Security. We'll have a lot of discussion about getting government spending under control by defaulting on our debt. We've been through that. And colleagues of mine in the House are saying that they want to default on the debt unless they get their way on their spending proposals. So there's a lot of jeopardy here, depending on what the outcome of this election is, where we start going in the House back to the impeachments, impeachment of Hunter Biden, maybe the impeachment of Joe Biden, default on the debt is a threat, government shutdown, and all of that's chaos for the well-being of our economy.
Congressman, thanks for being with us today. Peter Welch there, Congressman. On Election Day in America, Anne-Marie joining us around the table for some final thoughts on Election Day. AMH, there seems to be a gap between the world that the Democrats see and the way that Americans feel about it, whether it's the economy or whether it's crime in places like New York. How can they narrow that gap?
Well, I'm not sure if it's so much how they see it that's differently, it's how they communicate it that has really been the challenge. They have not been able to land their inflation message with the American electorate. And what you've seen is them throw a lot of options at the wall and not really anything has stuck. When it comes to crime, and I think of Kathy Hochul talking about the fact that they've put more money into it, but Americans, especially New Yorkers on the subway, MTA saying crime is up 30%, they're not feeling it. So what they've tried to do is just really hone in on these messages in the final days. And maybe that's helped because we have seen over the last weekend polls start to neutralize. The ABC Washington Post poll, the NBC poll. Hugely. Massive neutralization in terms of what we saw early in the fall when their abortion, really that rhetoric started to fall off and that wasn't resonating as much because people were really starting to grapple with these price pressures.
Emery, I want to get out in front of Daniel Yergin, who we're going to have on here. What an honor to close this hour on this election day with Dr. Yergin.
Can't believe you're saying my name in the same sentence as his.
There's a classic book, The Commanding Heights, which is a book of optimism about the American domestic and international experience. Take the temperature of Washington's commanding heights on this election day. Is it there, or is it just all cynicism and gloom to go the other way?
You know, the President of the United States said yesterday, he acknowledged coming off of Marine One after this rally in Maryland, he acknowledged the fact that they are likely going to lose seats in the House, and that's going to be harder. But he said, but at the end of the day, I'm optimistic. I think it really depends who you ask. The Republicans are incredibly optimistic that they're going to maintain control or gain control following this midterm election. And then that's domestically. And then you mentioned Dan Yergin, so my mind just immediately goes to internationally. There's a lot of questions about what does 2024 mean for international partners and depending on who gets that high seat in the White House.
Anne-Marie, what are you looking for to determine the leadership of the Democratic Party, really? Because there are some questions about whether President Biden will or can run again based on his popularity.
I think the first hints are going to be these midterm elections. How much is this a rebuke against a referendum against President Biden? If he loses the House, he can probably swing a re-election. If he loses the Senate as well, those whispers amongst Democratic circles that potentially he should not be the leader for the next generation as he's going to be turning 80 years old at the end of this month. Same, you hear this in Republican circles about the former President Donald Trump as well in his late 70s. Maybe those whispers start to become louder.
TK's got one question. Where are we hosting breakfast this morning?
God damn it.
Where's the house?
I thought you liked Ben's Chili Bowl. I made a reservation there.
They don't take
We get up so early, so it's really lunch for us, so it's perfect.
Okay. AMH, good to see you. This is nice, isn't it?
You guys should come back more often.
I have talked to my people to realize
Your
that
people, have they spoken to mine?
I don't think that. No,
okay, they don't speak at all.
But I think that the Washington story, seriously, John, the Washington story for global Wall Street and the people looking at economics, finance, and investment is tangible, and just with what we've seen from former President Trump in the last 72 hours. John, the next election, it's on right now.
Well, you've asked an interesting question, I think perhaps the question. If we get the results from the midterms, are we going to find out who the two people racing against each other are almost immediately because you're not going to see people run against them in primaries?
Well, I want to know about the midterms in terms of do those whispers become louder against the president? But it's a big field. It's 2 years, guys. It is 2 years.
You say it's a big field.
#election
That's not my question. If the former president runs, does someone challenge him?
I think Biden has to come out and he has to say, I was the only one in this party to beat him.
I don't mean Democrats.
Oh,
Does
well,
Ron
Mike
DeSantis
Pence
take a
is-
back seat? Do others take a back seat? Do they allow him to go at it?
I
on
don't
his
think
own?
Ron DeSantis takes a back seat.
Interesting.
That's like the real Emory there.
You know,
the
fired
folks
up.
just fired up.
AMH.
Long Island Emery.
Yeah, but we don't need it to go that, anyway. We've seen enough of that recently. Coming up, Dan Yergin, Vice Chairman of S&P Global and author of the new map, Energy, Climate and a Clash of Nations. You should see AMH at a basketball, honestly. Just like, as a fan.
She went to a basketball game?
Knicks on Saturday night.
The Knicks?
The Knicks.
Okay, cool.
Against the Celtics. It's a great game. From DC, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Donald Trump says he wants nothing to distract from the importance of today's midterm elections, so he's holding off until next week before making what he calls a very big announcement. The former president is expected to declare he'll make a third bid for the White House. The U.S. votes today in elections that will decide which party controls Congress. Millions cast their ballots in advance. Republicans feel good about their chances to capture both chambers. President Biden admits it will be tougher for Democrats to retain the House than the Senate. Close races mean it could be just days before the final result is determined. Job cuts in the tech industry are now nearing levels last seen in the early stages of the COVID pandemic. In recent weeks, a number of tech companies have said they will put hiring on hold or cut jobs outright, such as Twitter, Apple, Amazon, and Alphabet. The Wall Street Journal says Facebook parent Meta is set to cut thousands of workers this week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
NEC was started under President Clinton, and Bob Rubin was the first person to hold that job. Can you explain to people what it actually does and what the NEC does day to day? When, for example, who's in the NEC, who's on the NEC, what is your job actually to do?
So the National Economic Council, the job, the mandate, the mission of the organization is to coordinate economic policy across the executive branch and across the cabinet to make sure that the president is getting the benefit of when making decisions of his entire economic cabinet, and also that the economic cabinet is getting clear direction from the president as well. So that two ways. So it's a coordination function. On the NEC itself are all of the relevant cabinet members, the sort of core economic team, OMB, Council of Economic Advisors, Treasury, but also Secretary of Labor, Secretary of Commerce. My team, the NEC team, is a small team within the White House that is, our job is to do that coordination across the range of economic policy issues.
Now, you were the deputy in the Obama administration at the NEC. Now you're the director. Which NEC worked better, the Obama administration one or the Biden one?
Well, on the issues that I worked on in the Obama administration, it worked very, very well. And the current NEC works very well as well.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to a
increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
We haven't seen the impact of inflation and recession on consumer demand for hydrocarbon products. And we're already in a tight supply situation that you and I and others have talked about probably ad nauseum. So if China comes back, I think that's where, as the previous CEO said, that's where you get into the triple digits for WTI and Brent.
Back in the 90s, that's Regina Mayer, the global head of clients and markets at KPMG. Crude back in the 90s right now. From New York City and from Washington for our audience worldwide, let's go straight to the price action. I was close, wasn't I?
Yeah, I know. That was good.
I know. I
tried saw you catch yourself. That was good.
I know. I said all this morning from Washington. Anyway, futures up by a third of 1% on the S&P. Good afternoon. If you're in London. Anyway, still not afternoon then. No, it is now. Good morning. Futures positive. Yields lower by 3 basis points. 418.43. I'm joking. Euro dollar just in and around parity. Sub 0.2%. We're negative a little bit on the euro, and Tom, 91.15 on crude again. And we're facing down the real possibility of getting back to triple-digit crude.
The dash to 100, we're not there yet. Close in the last couple of days, John, and I really think we've got to look at what all are saying, which is demand picks up, China comes back, and there we are, back above 100.
If China reopens and the rumor mill, I have to say, it's been in overdrive over the last week or so on that topic.
On Election Day, on hydrocarbons, and on Election Day on this nation, Daniel Yergin joins us now to say he's vice chairman of S&P Global. Yes, author of a new map as the two parties will look for a new map into 2024. We could also say there's a class of nations. We could say that they both look for the prize today, but more than anything, they consider and we consider the commanding heights of 2022. Dan Yergin joins us this morning. Commanding heights, it is the most optimistic modern treatment of capitalism that is out there. Has the optimism evaporated? When you look at the commanding heights of America, have we given up the optimism?
Well, I think certainly we can put it, Tom, in terms of the balance of confidence in markets, which was very strong, has receded, and it has shifted. We've seen, in terms of the last 4 years, or really since the financial crisis of 2008, kind of a reassertion of a stronger government role across the economy.
Lisa and John want to jump in here with a lot of other questions in a 2-hour conversation with you. I'm kidding, folks. We get Dan Yergin for some precious minutes. Are we a two-party nation? Or are we fracturing our historic two-party system?
Well, I think it's hard to see us not having a two-party system, but we probably at this point have a four-party system. Moderates and the Democrats, moderates and the Republicans, and then the two sides of the party.
We need to talk about how we're going to build out refining capacity in this country. I've heard from Republicans that they're pro-fossil fuels and they're hopeful that they can change the story. I think a lot of us have our doubts about that. You know better than most, in fact, better than pretty much everyone we speak to, that these individuals, these companies make multi-decade decisions and no one's willing to make that decision right now. Can we change that story in America?
I don't think so. I think you'll see some modest, you'll see debottlenecking of refineries and some expansions and some building, but basically nobody's going to commit, as you say, to a long-term investment because you don't know what the regulations will be in 3 and 4 years. And in recent years, the regulations have really encouraged people to shut down refineries.
So how has this really changed the political lines, the fault lines around the world? We talk about how India has refined a lot of oil from Russia and then imported it or exported, back to Europe. How much is the U.S., is Europe willing to crack down
on those types of partnerships that are getting closer at a time when they need the ultimate product?
I think it's going to be very difficult. India was importing about 1% of its oil from Russia a year ago. Now it's 23%. And the Indian foreign minister just a day or so ago in Moscow said that Russia is, what do you say, a steady and time-tested partner. And of course, they're indicating they're not going to go along with a price cap, although Janet Yellen is going to New Delhi to encourage them to do that. But the Indians, I mean, this is a pretty strong assertion of their long-term relationship with Russia.
You know, Liam Dunning, a columnist on Bloomberg Opinion, wrote a story about how $5 gasoline is a big problem for the Democrats, but it's not a big problem for drivers. Are politicians trying to adopt the case for oil and fossil fuels and policy when really they've got very little control over it at this point?
Well, I think that's true. I mean, even you talk about windfall profits. I mean, the companies, I mean, it's really a global market. It's a very big global market with 100 million barrels a day. But nevertheless, we do know that gasoline prices have an outsized symbolic impact as well as a real impact in terms of how people vote.
When was the last time you saw relations between Riyadh and Washington as bad as they are right now?
Well, I just came back from there, and I would say it's pretty tense. I think it's been, you'd have to go back a few years. There have been earlier periods, obviously, Khashoggi was one period. But right now, it was, you know, it was just, you could feel the palpable tension between the U.S. and Saudi Arabia, although on the strategic interests, they do coincide.
Do you think they can reconcile their differences? And if they don't at this point, as things stand, what are the consequences?
Well, I think that that's a very good question. I think ultimately this, and I got into dialogues about that actually in there. I think that ultimately the strategic interests will coincide, but it's a rocky period right now, and obviously the cut in production a month before the U.S. election was very incendiary. I think the temperature has to be brought down because there are a lot of other big issues there, including Iran.
There is a new map, Dan. But what the new map is about the tradition, the fear of America that's seen in isolationism. What's our isolationism look right now, frankly, with the tensions John mentions in Saudi Arabia?
Less so than it did a few years ago because we're really revivified our basic coalitions with Europe and with our Asian partners. So I think that part is different. But we are, you know, with this war is so uncertain, and you could still have an accident that could carry it into a much more serious state.
Dan, final question, and it's a tough one, so forgive me for asking it. This administration has found it very, very difficult to square this circle, to say, drill please, and also to say, no more drilling. How do they square that circle?
Well, I think you just said it. It's a very hard circle to square. It's short term, we want more oil. Long term, we want to get off oil. And it's a very confusing message because, of course, if you're an investor, you're putting money in not for just tomorrow, but for the next few years. And so I think that, along with all the battles about ESG, is hindering investment. So U.S. production is up, but not as much this year as people would have expected.
Lisa?
I just think this is a fascinating issue. It just means higher prices longer term, right? I mean, then basically that's what this means. If you reduce prices, if you reduce supplies, the only thing that you can end up doing is basically try to price it out of existence.
Right.
But that's not politically popular.
And I think what you were talking about before, I mean, it's amazing to see that the oil price fluctuates on whether China is, on the number of COVID cases in China, because you're missing maybe 1.5 million barrels a day of demand from China. If you have that, we'd have a really tight market.
Yeah, quickly here. Elephant and donkey in the room. Give us a 1-year prediction on a gallon of gas or on a price of oil.
Well, can we run out the clock here on that one?
You punted. That was his punch.
Where's Brent Crude?
Well, I think I was just looking at our economic forecast for 2023. If the global economy is weak next year, then that will put some price. But I think there's probably a floor around $70 or $80 on a barrel of oil.
Dan can see the clock counting up to 56. He's just hoping that it gets there quicker.
I know. Look at the time.
Hey, Dan, fantastic to see you.
Good to see you.
Great to have you with us. Thank you, sir. Dan Yergin, the wonderful Dan Yergin of S&P Global, and of course, of so much more. Coming up, we'll count you down to the opening bow with Priya Misra of TD Securities, Mike Dada of MKM Holdings, Clinton Warren of JP Morgan Private Bank, and Henrietta Trays of Vader Partners. And I'm told AMH is making an appearance too. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
It is election day in the United States of America. From Washington, D.C., for our audience worldwide, good morning, good morning. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from the nation's capital, we begin with the big issue, the final push for America's vote.
We're just hours away from the most important midterm election in American history.
Remember, the power's in your hands.
We're going to take back the House. We're going to take back the Senate.
You wait. Democrats get blown out on Tuesday.
There's people running for office that want to take away our rights.
Democracy is on the ballot. It is.
They spent trillions of dollars and printed trillions when they were warned, if you do this, you are going to drive inflation through the roof.
One of the two major political parties in our country openly flirting with political violence, and we have seen the results that brings.
We're possibly one day away from losing this country.
Well, there's a lot on the line in this election.
It's a country-saving election.
We just have to remember who in the hell we are. We are the United States of America.
Joining us now to discuss is Bloomberg's Anne-Marie here in D.C. and Henrietta Trays of Veda Partners. AMH, go through the closing arguments for us as we count down to Election Day result time.
Well, you had the President of the United States, Joe Biden, campaigning yesterday, Jonathan, in Maryland. His closing argument was really about this is an important election for our lifetime, both in terms of preserving American rights, things like abortion he leaned into, as well as welfare programs like Social Security, like Medicare, which he says the Republicans, if they get a control of some of the economy, will want to dismantle. And then for the Republican side, the message hasn't changed, has it? For the last 6, 7, 8 months, it is, do you feel safer? Are things going up? And that's really what the focus is on, crime and inflation.
Henrietta, you've heard the messages there, the closing arguments. Which one is resonating more?
You know, no matter your position, the American public definitely agrees with both parties that this is a critical election. Turnout is broken records in Georgia. They broke single-day election records. I think it's resonating regardless of which party you subscribe to. They are getting people out to vote, and today looks to be no different. It should be pretty record-setting election day, which is critical, obviously, for the Republicans who are trailing after Democrats tend to vote early in greater numbers. So it's a critical day, and everybody's acting like they know it.
Henrietta, it's clear that inflation is top of mind. Is it clear from your perspective what the electorate blames that on?
I think the electorate, and we even heard Donald Trump yesterday say that it's to do with energy prices. So a big portion of that is out of the control of either party. We've seen Congress try to address energy prices for the last year, and there's really very little they can do. Biden's obviously released the SPR as extensively as he really can, but it's the war in Ukraine, and I think voters are smart enough to understand that. So when former President Trump says that that's the leading indicator of inflation, I think we need to be mindful of that. And that's what Democrats and Republicans are taking away. As a previous guest of yours was speaking to, every voter drives down the street and sees the price of gas and knows that, $5 is pretty high. So I think it's a huge problem, but energy is the main driver.
I've asked market participants all week what they'd like to know the outcome of right now. Would it be the midterms or CPI? And I've had mixed questions. Let me ask the question of both of you, this one right now. If you could know the outcome of one race in these midterms, which one would it be? And Anne-Marie, first to you.
I'm going to go with Pennsylvania because the polls are really showing that the Republicans are closing in Nevada, right? And right now the Democrats hold that race. Georgia potentially goes into a runoff, so I'm going to put that to the side for the moment. I want to know what happens in Pennsylvania because this has gotten so much tighter, and it was a really difficult debate for Democrat John Fetterman, and he was really starting to gain a lot of momentum, and I wonder if Mehmet Oz is able to really push through in the final, and that is the one where you saw the rock stars of the Democratic Party come out. Barack Obama, Biden, they have all been making stops there to support him.
Henrietta, what about you?
I am a lot more selfish than Anne-Marie, I have to admit. I do not want to do this for another 4 weeks. I would like to know Georgia tonight.
Do you think we will know Georgia tonight based on the polls so far?
No, I don't. And that is a real bummer. But there is some really incredible data coming out of Georgia and the great work of the U.S. Elections Project tracking. As you know, Georgia does not track voter preference or party registration. So we only have really race to go by. A great metric, but it is helpful in the context that we don't have any other data. And the Black voter turnout is exceeding its 2020 thresholds for this stage of the election. It's under its January 2021 threshold of 30.3, I want to say it was, and they're at about 29.2% right now. So that bodes really well for the incumbent Raphael Warnock, and fingers crossed they call that tonight or tomorrow. Anything before the next 4 weeks, I'll take.
I think market participants are hoping for the same thing. Henrietta, the Georgia runoffs of early 2021 were so consequential for policy from this White House. Is this just as consequential this time around?
To be honest, to get back to your first question, I'd rather know CPI because, quite frankly, regardless of the outcome of the election, neither party is going to have a sizable enough majority to do much of anything. So I think investors love a split Congress. They love gridlock because it means there won't be, tax changes or spending ramifications. I would rather know CPI just in general because at the end of the day, we have 2 months that I think are going to be really critical here between Election Day and call it Christmas. And then we're going to be in 2 years of gridlock regardless of the outcome tonight. So that's I think my main takeaway for investors. The bigger picture is 2024 and how this election sets us up. Particularly, I think Nevada has a lot to say about that.
You have no idea how disappointed Anne-Marie is. She was hoping for 4 weeks of an election, and you want CPI Thursday.
I need something to talk about.
You're not alone. AMH, the final word here then. One thing we will be talking about potentially, the announcement of an announcement from the former president, Donald Trump. What is that announcement?
He keeps teeing it up, and he did it again last night, even putting a date on it. He will have a big announcement, he says, November 15th in Mar-a-Lago, of course, his resident and resort in Florida. And that announcement is likely going to be his third bid for the White House. And that just really sets off the 2024 presidential election just a week after the midterms. And then that's all we're really going to hear for the next 2 years, who are going to be the presidential candidates for the Republicans and the Democrats. And the former president is making the first bid for it.
AMH, thank you. As always, Anne-Marie here in D.C. Henrietta, thank you. Henrietta Trays there of Veda Partners. With us now is TD's Priya Misra and Michael Dada of MKM Partners. Priya, you get the honours. The first question, CPI, Thursday, I can give you the results right now, or the outcome of these midterms. Which one do you want?
CPI. I'd actually like CPI for the next 3 months, if you can give us.
I can't give you 3-month rolling average of CPI, unfortunately, Priya. But tell me why it's not the midterms.
You know, I think even under the current makeup, the Democrats have not been able to do a whole lot beyond essentially any sort of COVID fiscal stimulus. So we didn't have a lot of fiscal stimulus in the pipeline. They weren't talking about it. So, you know, I think having divided government, the conventional wisdom is you don't get a whole lot of policy changes. I think people like lack of political uncertainty, which is hard to price. So, you know, but I would say we had political gridlock even before the midterm. So I don't think there'll be a whole lot. I do worry about the debt ceiling, but you can't position for that today. That's going to be something we're going to have to deal with pretty much all of next year. So I don't think it's a big event. It's all going to be sort of setting up for 24. CPI is the number one thing the Fed is focused on. So it's going to tell us whether that December meeting is 75 or 50. You know, are we seeing some decline in some of the more broad-based nature of this inflation number? So it's not just the headline number. I'd like to see the details of that report, because I think that'll tell us a lot more about how entrenched inflation expectations are getting.
Mike Dada, what's your take on this, sir?
Yeah, I agree with that. I think the inflation statistics are going to be more important than the election. You know, typically markets do like gridlock, but as mentioned, we've already had gridlock for all practical purposes, and the Fed is really laser focused on the inflation readings. It's put the business cycle in a bit of a pickle because inflation will tend to lag the cycle. So if you have the Fed chasing down lagging indicators with a very rapid succession of interest rate increases and quantitative tightening, there is a very significant risk that the Fed significantly overshoots neutral. And, you know, that does put us in a bind for next year in terms of the business cycle outlook. But I do think we're going to get some good news on CPI inflation. One quick statistic for you, John. The prices paid index from the ISM manufacturing data has collapsed to 46.6 as of October. Back in March, it was above 87. There's about a 6-month lead time from that index over the headline CPI. So we should, you know, I'm not going to bet the farm on the next reading this week, but I think over the next 3 to 6 months, we should have some better news on the inflation front.
Mike, answer this one for me. Do you think inflation can fall as quickly as it rose?
Yeah, I think it can fall quite rapidly if the economy is slowing significantly, and I do think there is evidence of that. We've had a lot of volatility in the GDP statistics and a lot of confusion, but if you look at real final sales for the private sector, we've lost a tremendous amount of momentum over the course of the last 3 quarters, and in fact, you know, Q3 was essentially stall speed. There's actually a slight lead from those statistics to payroll growth. And the most recent numbers would suggest a fairly significant deceleration in the labor market. And if we think about what the Fed is focused on, headline and core inflation together, but some of the more lagging aspects of inflation that have a lot of inertia, wages, rents, core services inflation, that's going to take a bit more time, but I do think those numbers are going to be moving down as we get into next year with much weaker growth and probably a recession.
Priya, this is a big question. Is inflation stickier on the way back down?
So I'm a little more concerned that it is going to be sticky. I mean, you know, declining from 8% headline inflation to 5%, maybe that's a little bit faster because some of the commodity price increases go away. I do worry about this, the broad-based nature of service inflation, you know, and I'm linking that somewhat to wage inflation. Wage inflation's running at a 5% level. It's going to be really hard. And the labor market, we just had the last payroll report last week, still showing strength. And I think we're coming into a growth slowdown with an extremely tight labor market. If companies are going to essentially hoard labor and not have the layoffs, they may stop hiring, they may reduce job openings. But until the layoffs start, I think wages are going to stay high, and that's going to prevent CPI, core CPI, from getting close to that 2% target. I think, there is the decline, which we are also looking for. But I worry about sticky on the way down. And sort of if we start to look like we're stabilizing at 4%, 5% inflation, it's much lower than here, but it's much too high for that Fed 2% target. I think they're telling us they're committed to that. They're willing to risk pain. And I think that's the environment where, with slowing growth, I would completely agree with Michael. I think we're seeing signs that the consumer is slowing, that savings buffer is coming down. But can the Fed respond? If inflation is sticky, I think they're going to stand strong. And then we're going to see no fiscal support, which divided government will bring us, and very limited monetary support. I think the hikes will stop, but I don't think they can afford to signal rate cuts with inflation high. So I think it's a key question. Is it going to be sticky? And at what level? I think if we get closer to 3%, they might say, well, that's kind of close to 2%. But if we are getting stuck at 4 or 5%, I think it's much too high. And the Fed will just have to say, you know what, we told you there's going to be pain. It's a little more than we thought, but we have to deal with this. This is the cost of getting inflation back down to 2%.
So, Priya, how does that assessment inform your view on the depth and duration of a potential downturn next year?
Sure. So, I think there's a view out there for short, shallow recession. The shallow part I do see, because we're coming into a recession with not a whole lot of leverage in the system. I do worry that there's hidden forms of leverage. I think UK LDI tells us that there could be leverage in the derivatives market, which is not well understood. But maybe it is shallow because the consumer is in a better position. The corporate sector has termed out debt. But I think it could be much longer. And we're all going to spend all next year looking for the Fed to respond, and they may not be able to respond. So how this affects our view is, that we do think we head into a recession. But unlike the last few recessions, we don't see the Fed responding for a good 6 months after the recession starts. We do see them starting to ease by the end of next year and really ramping up those eases in 24. But, and how do you trade that? Well, do you buy the 2-year? Typically has been the best trade into a recession. I would say if inflation is high, the 2 years is going to be a very frustrating long. It's better to be long 10s. We actually went long 10s last week. I think we're peaking in terms of longer term rates. But that might be a safer place to be in until we see clear and convincing signs. These are the Fed words, which is why I would like the next 3 months of CPI rather than just Thursday, for the Fed to say, okay, we can now start to slow down, as well as start to congregate around what that terminal rate is, as opposed to telling us, which they did last week, that it's highly uncertain where they end up in terms of the hiking cycle.
This is why there's an argument right now that the outcome of these midterms may not be important tomorrow, next week, a month from now, 3 months from now, but could take on increased importance 12 months from now, because monetary policy won't respond to a downturn. It's actively achieving one, looking to actually achieve one. We won't have that fiscal offset because Congress can't deliver one. And with all of this in mind, Mike Dada, I'm going to go back to the question I just asked Priya Misra. Short and shallow is the consensus. Do you challenge that consensus view?
Well, I think that's what we're all hoping for. Nobody wants to see a long, deep, disruptive recession, especially because we'll end up with a populist uprising, and that's really not good. It's not good for the Fed and their independence either. But we are in this predicament because the Fed ended up with a false sense of security over the inflation outlook by focusing on deeply lagging indicators, and monetary policy was way too accommodative. And so unfortunately now the Fed wants to make sure that inflation expectations stay low. And so the policy is to continue raising, to get to restrictive and to hold. And restrictive and hold means that, obviously there's a risk of a recession, and it might be deeper and longer than we're all hoping for. And so really all it would take to create a deeper downturn than anticipated is just for the Fed to impose a restrictive monetary stance and hold it there. How that plays out is really going to depend on the behavior of some of these lagging indicators that the Fed is very focused on. Hopefully, what can come out of this once we get through it, is a more forward-looking, preemptive monetary policy. When the Fed falls way behind the curve and the economy gets ahead of steam and inflation explodes, those tend to be short, very volatile business cycles, and that's essentially what we're dealing with now. So I think there are ways to run policy in a much more effective, forward-looking fashion that will be more stabilizing for the business cycle.
Mike Data, Priya Misra, sticking with us. Equity futures right now, positive 0.4%. Coming up, the Fed doubling down on its inflation fight.
Inflation should come down, but don't expect its drop to be immediate or predictable. We've been through multiple shocks, as I discussed, and significant shocks simply take time to dampen.
Plus more pushback from Capitol Hill. That conversation up next.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Very premature, in my view, to think about or be talking about pausing our rate hike. We still have some ways to go. And incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
The economy taking center stage as voters cast their ballot. Democrats ramping up the pressure on the Fed. Congresswoman Maxine Waters writing the following: enough is enough. The Fed has acknowledged that it can take time for a rate hike to fully take hold on the economy. I implore the Fed to heed these warnings before moving forward with additional rate hikes. Just the latest addition to a growing list of warnings coming out of Capitol Hill. The big question: are there more to come? Priya Misra, Mike Data, back with us for a final thought. Priya, for both of you, and Priya, I'll start with you. How complicated is life about to get down in Washington for this Federal Reserve?
I think it's already not easy and it's going to get worse. I think that's because as the data slows down, it's going to be even harder for the Fed to make the case that they're overemphasizing one part of the mandate versus another. Right now, inflation's too high, so they're emphasizing on inflation, and the labor market looks strong. But they're going to get a lot of political heat. I think they're going to have to keep saying that they're independent. They are slowing down the pace of hikes, so that allows them to recalibrate policy if needed. But I think it's it's still going to come down to inflation. They're going to have to ignore a lot of, I think there'll be more negativity. They're also in a negative net income position. So it's not just about rate hikes. It's the fact that the balance sheet is taking losses. It's going to look politically pretty ugly for the Fed, but I think they hold strong and they base it on what happens to inflation as well as the labor market.
Mike Dowder, your thoughts, sir?
Yeah, I completely agree with all of that. A lot of good points there. So, if you look at these polls as we head into the election today, people are upset and agitated about inflation. But as mentioned, the labor market is very, very tight. Perhaps the unemployment rate is just bottoming out now. Typically, the unemployment rate will bottom, hit a cyclical trough about 9 months before a recession. So we don't really have the disturbance or the folks being upset because the labor market's loosening. They're upset about inflation. As we get into next year and the unemployment rate moves up and there's a likely recession, then that could start to deliver more political heat onto the Fed's lap, and they'll have to deal with that. But this is a predicament of their own making. They overly eased monetary and fiscal policy, and they held there too long, so they're trying to reverse it. And there's no easy way to do that without a disruption in the business cycle. And so that's what we're all having to deal with, unfortunately.
You've basically both just said it, that this could be easier relative to what it could have been if they'd gone earlier. And I would say that this is easy relative to what it will be in 12 months' time with the dual mandates in conflict. And as Mike, you suggest, that's a story still in our future. And things could get dicey down in Washington as the Federal Reserve looks to do even more in the face of higher unemployment. In fact, that seems to be the stated goal. Mike Dowder, Priya Misra, to the both of you, fantastic as always. Your equity market looks a little something like this on the S&P. It's positive by 1/3%. We've had 2 days of gains, Friday, Monday. Can we make it Tuesday as well? Coming up the morning calls and later, strategists on the street bracing for impact from midterms. We'll catch up with JP Morgan's Clinton Warren, looking for gridlock. More on that around the opening bell. This is Bloomberg.
of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Minutes away from the opening bell, equity shaping up as follows on the S&P 500, pushing higher on the Nasdaq also by about 1/3 of 1%, 0.6% respectively. Let's get you some morning calls. First up, Evercore downgrading Lyft to inline, expecting another challenging year with results raising concerns about the company's outlook. Jefferies downgrading Six Flags Entertainment to hold, seeing limited upside and mounting risks to growth. And finally, Wedbush downgrading Williams-Sonoma to neutral, highlighting a weakening macro environment. That stock is down by about 1.6%. Coming up, JP Morgan's Clinton Warren expecting a divided government right here in Washington. Why political gridlock could be the best outcome for the equity market bulls. That conversation up next.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
Seconds away from the cash open in New York. Let's get you some price action going into that opening bout this Tuesday morning. Good morning to you all just tuning in. Equities are positive by 1/3% on the S&P. On the Nasdaq 100 up 0.6%. Gains on Friday, gains on Monday. Can we make it gains on Tuesday? There's your opening bout. Switch on the board and get to the bond market. What a year it's been in the bond market for fixed income. Treasuries lower, yields higher. Today the other way around. Treasuries up, yields down by 2 basis points, just short of 420 now, 418.85. Euro clinging on to parity, euro dollar negative, let's call it 1/10%. And at the epicenter of this election debate is inflation and what happens here. Crude back in the 90s over the last couple of weeks, 91.55 on WTI. We're down 1/4%. That's the price action. Let's get you some movers, and we can do that with Katie Greifeld. Hey, Katie.
Hey, John. Well, I have some good news. If you're a stock bull, this is the best possible November setup for you. The average gain for the S&P 500 in a midterm election year is 2%. If you compare that to a presidential year, that gain whittles down to just 1.1%. And in years where nothing is happening, November delivers just a 0.6% gain. So again, from the perspective of an equity bull, that is purely the perspective I'm talking from, the best possible outcome today is that Republicans take control of just one chamber. If you look back since the end of the Second World War, years with a split Congress have produced the best returns, almost 13% for the S&P 500. If you look at that chart there, years with one party in control, either party, they've trailed the average overall about 8.2% there. And it may not matter too much if recent trends do hold, John. I don't need to tell you that tech has been struggling lately, so much so that the tech ETF's 5-year returns are just about even with XLE. That is the big energy ETF on the street. Given how huge the tech sector is, of course, that's bad news on a benchmark level, John.
That chart is amazing to look at. And Katie, I haven't looked at that yet. That is absolutely unbelievable how much we've taken back from that big tech rally. Katie, great work as always. About a minute or so, 2 minutes into this session, Tuesday morning, equities up by about 0.1% on the S&P, on the NASDAQ up 0.2%. 2 events this week, CPI on Thursday. Before we get there, it's all about the midterms. Red versus blue, Wall Street, weighing the market impact of the midterm elections. Morgan Stanley's Mike Wilson on this program, expecting a divided government to keep this bear market rally going.
The midterms, though, however, could have lasting implications if it's a decisive victory for the Republicans. The majority of the inflation spike was a result of excessive fiscal spending, and that, of course, will be curtailed even if the Republicans just win one chamber. Ultimately, it should be good for bonds. Bond yields lower has been key to our tactical rally call.
Bullish for bonds and bullish for stocks. That's the takeaway from Mike Wilson. Laurie Calvasina of RBC echoing that call, writing the following. Equity investors would take a bullish cue from the historical playbook, which indicates that stocks tend to experience above-trend gains of 13 to 14% on an average basis in years that have a Democratic president and a split or Republican Congress. Joining us now to discuss is JP Morgan's Clinton Warren. Clinton, let's start here with the so-called midterm seasonality. Is it relevant given the unique moment that we're in right now?
Yes, I think it's very relevant, and I just hope everyone takes the time out of their busy schedules to go out and vote. It's one of the great privileges that we have here in the States. And since 1943, there's been 19 midterm elections, with the incumbent party picking up seats in the House 2 times and seats in the Senate 4 times. So based on what everyone is thinking about this election cycle, with citizens focused on the economy and inflation, there's no surprise that a lot of the pollsters have the Republicans picking up at least the House and even maybe the Senate, which seems to be more of a toss-up. So we are heading into what seems to be a divided government, which, as your chart showed before, seems to be quite positive for the equity markets. What we have seen historically is that volatility decreases as we get some certainty on the political landscape, and markets do rebound nicely. However, I do think the impact of political circumstances this year will be somewhat muted, as we have CPI coming 2 days later on Thursday, which will probably take all the headlines and take all the market participants' thoughts. One thing I will say, though, is that if we do have that deep recession that some pundits are thinking about, a divided government does make it harder for fiscal policy to be passed. Obviously, monetary policy will be something on the Fed's mind, but if there's that deep recession and we need some sort of fiscal stimulus, it may be hard for a divided government to accomplish something to help us get out of that mess.
So, Clinton, it raises an important question then. If fiscal policy is constrained because of gridlock down here in Washington, is that a positive on net? If you're saying short-term it might be, long-term maybe not, is it a positive or not?
I think you have to play out the timeline, right? So a lot of forecasters are showing some sort of recession into the mid to latter parts of 2023. So if that happens, the Fed's going to be going on a rate-lowering campaign, and that gets you into 2024, which is another election year and one that will probably be more heated. So I think there'll be things on both sides and motivations on both sides, but it could lead to a harder landing if there is that deep recession that some economists are forecasting.
Clinton, every time we do this, when it comes to the midterms, when it comes to any election, the presidential election, the general, we always talk about gridlock. Clinton, it feels like gridlock is the consensus view, and it makes me wonder whether it's already priced. Clinton, is it already priced?
Yeah, I mean, everyone that I talk to has a divided government kind of priced into the models. I think the biggest question on everyone's mind is what's going to happen in the Senate. And the last polls I looked at is like a 50-50 toss-up. But either way, that leads to a divided government. So yeah, it's going to be gridlock, which slows things down, which makes Washington kind of pause. But I'm just concerned that if there's something that major needs to happen, that both sides will come together and do what's right for the country.
So, Clinton, let's talk about the tail risk. We've dealt with a consensus view. Let's talk about the tails. What happens if the Democrats hold on? What is it about that scenario that unnerves investors and clients you speak to?
Yeah, I think a lot of people are concerned about some increased spending that can happen, especially on where we are in the economy and the brink of all the additional spending that we just had coming out of the pandemic. So I think that's one of the biggest worries. And I think people just want to get back to a more normal environment, and we're starting to feel some of the effects of the pandemic hanging over now. That's why you see equity markets down 25%. You see bond markets down 16%. So I do think that tail risk of the Democrats taking and retaining both House and the Senate, the biggest concern would be increased spending, which has some people on pause based on where we are in this economic cycle.
And Clinton, we all understand why this is consequential for sentiment. Can you help me understand from a sector basis how this could be important too? And let's pick out one, let's pick out energy. Energy has done tremendously well, brilliantly, under Democratic leadership. And Clinton, I just wonder whether sometimes we get this all back to front. How relevant is it?
No, it's very relevant. And if you look at just earnings so far, Q3 earnings, the earnings have come in up 3%. If you strip out energy, they're actually down 5% or so. So energy has done well for a number of reasons. I don't think you can just put that into what's going on in Washington. There's a number of other factors that have played into that. So it's something to watch. I just don't know if it's going to be a major impact to that sector in the short run. Obviously, there's longer term impacts with some things on their agenda, but I don't see it being anything to worry about in the short term.
Well, Clinton, let's finish on this bear market rally. You heard from Mike Wilson of Morgan Stanley. He thinks it can continue off the back of the midterms. The events and how the dominoes fall are pretty clear. You get a gridlock, means bond yields fall, equities rally. Is that something you're on side with?
Once again, I mean, I do think the midterms is something that everyone's going to be watching, but we have inflation data coming out, CPI, on Thursday, and I was trying to think of some sort of analogy. And to me, inflation is like roaches. The Fed just can't get rid of it. They're throwing everything at this problem, and they just can't get rid of it. And that's going to be the thing that's going to take the headlines. It's going to take market participants. And that's the only thing that folks are going to be thinking about come Thursday morning. So, yeah, there's going to be some short-term noise. The market's going to move Tuesday, late Wednesday, as we're starting to get results. But on Thursday, it's going to be old news, as everyone's going to be focused on what the Fed's going to do and what's happening with inflation.
Hey, Clinton, awesome to catch up. Clinton Warren there of JP Morgan Private Bank. Right now, the equity market essentially unchanged on the S&P 500. On the NASDAQ, we're positive just 0.03% going into a major event. And then from here, it's on to CPI on Thursday, looking for year-over-year inflation to come in just inside of 8%. Of course, Wall Street very focused on that core month-over-month figure. Coming up on this program, U.S. voters heading to the polls with all eyes on Pennsylvania's Senate race.
Social Security and Medicare is in the ballot. There's something else on the ballot. Character. John has character, integrity, and he's going to be a hell of a good senator.
That conversation still ahead. You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean?
does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
If somebody says, I want to be, and a person has an impact on society, what would you recommend that somebody do to train themselves and to work their way up to be somebody that's impactful on society?
Well, I think the first thing you've got to believe in something that you really care about. You know, I've been fortunate that over the course of my career, I've come up with things that have mattered to me, and I've pursued them. You know, the best advice I ever got was from Mike Bloomberg. And he said to me at one point, he said, show me somebody who's never lost, and I'll show you a loser. And I believe that if you believe in something, go after it, take risk. Obviously, they should be smart risks, but they should be around things that you really care about.
So you would see your legacy as being actually target ALS and helping to moderate the impact of ALS, if not curing it.
That's my final legacy. I'm proud of some of the other stuff that I've done as well. Transformation of New York after 9/11. I'm also incredibly proud of a lot of the companies we created at Sidewalk, but I feel like I've done a lot.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
To get out, you have to vote.
Democracy is literally on the ballot.
The stakes are high. Our country has never been so bad as it is right now.
Under my predecessor, the economy was in ruin.
Let me tell you something, Pennsylvania.
John has character, integrity, and he's going to be a hell of a good senator.
The people of Pennsylvania are going to elect Dr. Mehmet Oz to the United States Senate.
This is a defining moment for the nation.
The biggest names descending on Pennsylvania as the race between Fetterman and Oz takes center stage.
Everyone that's willing to go out and go knock on doors and to get out the votes right now, because there is just so much at stake right now in this race right now.
I don't have to come up with any brilliant new ideas. You actually have them all. That we have the answers, the solutions. But John Fetterman's not one of them.
I won my very first election by one single vote. Got knocked down at that stroke, but we're back up, and we're taking it all across.
Bloomberg's Katie Lyons joins us now from Philadelphia. Morning, Katie.
Morning, John. This is an incredibly close race, and one that is crucial because it ultimately could help decide the balance of the Senate. The seat in question is that of retiring Republican Senator Pat Toomey. So this is one of the Democrats' best opportunities to flip a seat. Of course, the man trying to do that is John Fetterman, the Democratic candidate, up against Mehmet Oz. Fetterman had been holding a lead throughout this entire campaign, but the latest polls this morning, the 538 aggregate polling, shows that Oz is ahead by 0.5%. So this is going to be a nail-biter race, and because this is Pennsylvania, because the rules here dictate that you cannot start counting mail-in ballots until 7 a.m. on Election Day, so really just a few hours ago, it means we may not have results for this race for several days. Already 1.1 million mail-in ballots have been returned, so that is a lot to count. And then if the margin of the ultimate tally is less than 0.5%, this vote would go to an automatic recount. And if you trust the polls, it does indeed look like the race could be that close. And of course, if Fetterman is able to pull it off, if this does flip to a Democratic seat, that means the Republicans would have to win at least 2 out of 3 in Nevada, Arizona, or Georgia. So that is why all eyes are here in Pennsylvania today. Turnout is high, voters are mobilized, and we are going to be looking for results for possibly the next several days, Sean.
Katie Lyons, thank you. AMH right here in Washington, D.C. I want to continue this conversation. Anne-Marie, let's build on this Pennsylvania conversation. Given who is campaigning in that state, Is this kind of like a proxy war, an appetizer for the general in 2 years?
That's what it feels like, right? You have the rock stars of the Democrats, the rock stars of the Republicans, all coming. Because as Kayleigh says, this is a chance for Democrats to flip that seat. And the reason why they need to flip it is not to gain an edge in a very thin majority they already have in the Senate. It's because they're likely going to lose in some other places. You look like Nevada. They may lose that Democratic hold in Nevada. So this is incredibly important. But also, Jonathan, 2020 presidential election, it came down to Pennsylvania. And it could potentially come down to Pennsylvania for this midterm.
There's a whole host of races we could talk about. That's one. Let's talk about another. The governor race in New York.
Oh, yeah.
It's remarkable to see the President of the United States campaigning in a state that he won by, I think, 23 points back in 2020, the weekend before the midterms.
Democrats
if you told me
carry New
10 months ago that this is what was going to happen, I don't think many people would believe me.
I'm shocked. I grew up in New York. We haven't seen a Republican governor since George Pataki. This is something that most Democrats in New York are shocked about, and the fact that is so last minute, like descending on, almost chaos it feels like in terms of them trying to get these votes out in a place like New York. The President of the United States is in Westchester County, in Bronxville. You've been there. That says a lot and how worried they are about Tuesday's election. What was the front page of the New York Post today? That they want their streets back, and they're endorsing a Zeldin.
It feels panicky. Let's talk about something else here in the market. In the market right now, and we're lower by not even 1/10%, I've got a long, long list of guests who have all said gridlock positive for markets. Can you paint a picture for everybody about what gridlock's going to look like for the next 2 years in Washington, D.C.?
I guess they like gridlock because it means there won't be any big legislation in terms of changes, like taxes, et cetera. But when you have gridlock, the most worrisome issue on the docket for this new Congress is going to be the debt ceiling and the fiscal cliff. And when you have gridlock, that's going to be incredibly challenging for them to get through, which is why you have Senator Bernie Sanders saying we should handle it now in the lame duck session before the new year. So gridlock may sound nice in terms of big picture items for the market, but it's still going to be incredibly troublesome to get some of really big picture items like the debt ceiling, like making sure the United States can pay their bills, getting those votes.
You'll be busy, so will Mike McKee. Mike McKee joins us now out of New York City. Mike McKee, are we going to do this all over again?
Looks like we're going to do it all over again. Now, the important thing to realize is the debt ceiling doesn't limit debt. The government can spend whatever it wants. It limits the government's ability to pay for that debt. And the problem is not just gridlock, but the Republicans are coming to power saying they are going to hold the country hostage and perhaps default in order to force Joe Biden into some spending cuts. You can see how close we are there to the debt ceiling. Might hit it in the next month or so. We're only about $200 billion below that. And of course, we've been through this many times before. The government, the Treasury Department, can use what they call extraordinary measures, ways of postponing bill paying, essentially, to stay below it for a while. Bloomberg Economics thinks they can get to late 2023, but that months of drama will weigh on the markets, and the Treasury will be issuing fewer bills because they're going to try to stay below that limit. That will cause problems for money markets. Interest rates will rise. So what happens? Well, what Wall Street thinks will happen is that Republicans will cave before the default because nobody wants a default, and they'll possibly make a spending deal with Biden. And the Fed's reverse repo facility will provide T-bills to the market, so we won't have problems there. But what could happen? The U.S. could default on its debts. We came very close a couple of times in the last decade. Treasury and bond markets would seize up. The U.S. debt would be downgraded, interest rates permanently higher. Oh, and there's one other thing. The government has a temporary spending bill in place until December 16th, so the possibility of a government shutdown looms if the Republicans want to move this to the confrontation status as well. The problem, John, is that nobody knows how serious the Republicans are about holding the country hostage, but it is something Wall Street's going to have to pay attention to for the next year.
Can I just say that I'm so happy that I don't have to follow this and you guys do it for me, because this is going to get ridiculous quickly. AMH, right here in D.C., Mike McKee over in New York. You've heard it a million times, haven't you? Gridlock is good for this equity market. Gridlock might be the optimal policy stance for this market right now. The question we've got to ask in markets is whether that's the policy stance we need, we want, if we're in a recession 12 months from now. And that's an ongoing debate, and we'll keep having that conversation on this program. On the S&P, we're positive by almost 0.1%. Really no price action to speak of at the index level. On the NASDAQ, we're down by just 0.02%. Let's get you some sector price action. We can do that with Katie Greifeld. Hey, Katie.
Hey, John, I'm going to try to make this interesting. Like you said, the S&P 500 just about flat. If you look on the sector level, you have 7 higher, 4 lower, not too much action on either side. We're talking less than 1% moves. You do have materials leading to the upside, energy to the downside, and it's energy and big tech that I want to talk about as we wrap it into this midterms conversation. Obviously, both groups have a lot riding on this election. The progressive wing of the Democratic Party, of course, has expressed the possibility of breaking up big tech. Think Microsoft, Amazon, Apple. On the other side, meanwhile, the White House potential windfall tax on big oil means that the stakes are high for the energy sector as well. But as you can see, both not doing too much. Those outcomes become less likely with a split Congress or even Republican control. John, I did want to talk about Take-Two Interactive briefly because we are still in earnings season. You had the video game developer report last night, and it wasn't too pretty. You had weakness in the mobile business that led to a cut in booking guidance. As you can see, shares are down double digits. That's bringing down the overall video game group just slightly today, John.
Katie, thank you. Wonderful, as always. About 22 minutes into the session, we're up 0.1% on the S&P 500. Coming up on Election Day in America, the closing arguments, and of course, your trading diary through the week ahead. From D.C., this is Bloomberg.
Consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vuong is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
We're just hours away from the most important midterm election in American history.
Remember, the power's in your hands.
We're going to take back the House. We're going to take back the Senate.
You wait. Democrats get blown out on Tuesday.
There's people running for office that want to take away our rights. Democracy is on the ballot. It is.
They spent trillions of dollars and printed trillions when they were warned, if you do this, you are going to drive inflation through the roof.
One of the two major political parties in our country openly flirting with political violence, and we have seen the results that brings.
We're possibly one day away from losing this country.
But there's a lot on the line in this election.
It's a country-saving election.
We just have to remember who in the hell we are. We are the United States of America.
A
final word from the President of the United States. The closing arguments are in, the results are hours away. The price action going into it all looks like this. A third day of gains on the S&P 500. Muted price action this morning, as you might expect, 25 minutes into the session, up by 0.25% on the S&P. On the Nasdaq 100, up 0.6%. The state of play in the bond market looks like this: 2s, 10s, and 30s. Two-year yields come in 4 basis points, 4.68 on a 10-year, down 5 basis points to 4.1591. Your trading diary: midterm elections underway, Congress up for grabs. You know that already. More Fed speak through the week. Wednesday with Williams, Barkin, Kashgari all on deck. It continues with Waller, Harker, Logan, Daly, Mester, and George all speaking on Thursday. Plus, we get another round of jobless claims, and the main event, according to so many of you, it's not right here in Washington. It's not the vote. It's CPI on Thursday from Washington, D.C. Thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Okay, so you're moving in on me quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
No one covers the world like Bloomberg.
The writing's on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145.
and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010, after staying for almost 1 year in the hospital. He died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.